All right, I am 6 minutes late, but good morning, good afternoon, good evening, wherever you are. I want to very quickly summarize whatever happened in the FOMC meeting. Before we are waiting for earnings, we are waiting for Robinhood, Meta, and Microsoft. I think there are a bunch of other companies releasing their earnings today. If so, let's see. Let me just go to the pages. I think we are seeing a little bit of a PC market at the moment. The sell-off is kind of accelerating as we get into the close. Let me just turn on my news channels. I literally just finished a run and showered and hopped on. So I got a little bit of coffee, got my cereal, and we are ready for the earnings. So I think the biggest news is actually 3 dissents in the FOMC meeting vote. And we have also learned that Kevin Walsh can speak in code. Like, it took so much to decipher what he's trying to say. And at one point, SoFi was actually at $15.70. All right, so this is exactly what I want to start by talking about. 3 dissents, 2 were Karens. That's fair. I mean, the 2 were already there the previous meeting, if I'm not mistaken. So it's just one new dissenter. But I caught a couple of things. I caught a couple of things on the FOMC meeting. Let me see. Let me pull it up. So when asked about what he would do to control inflation, apart from interest rates, and what are the tools that he have, I think he said very clearly that one of the ways that the Federal Reserve can control inflation is by controlling inflation expectations, not just by adjusting interest rates, which is why you can see that throughout the entire, he's playing this very delicate game of seesaw during the meeting. On one hand, he's like, we are going to get the 2%. There's no changing. We are going to get the 2%. And then halfway through the meeting, he kind of took it back a little bit and he was like, for now, we will do 2% because that's the mandate at the start of the year. Next year, we will re-examine it again. So he's leaving the door open. So I think that uncertainty is what markets are a little bit fussy about, because previously, all the way up to the point where he said that in January of 2027, we will review what's the new document for the year. We might be looking at a PCE, we might expand our reach, and then that is when the market started to get pissy. Because up until that point, in my run, I was feeling very pleased with myself that SoFi went all the way up to 1572. Good afternoon, Kevin. Nice to see you here. So at least right now, SoFi is still at 1540. I think part of that is pricing in the FOMC. Part of that is also pricing in the kind of earnings that we are getting. All right. Let me bring back. Let's take a look at what's happening with the markets. Give me a minute. We do have quite a few earnings coming up. We are looking at Microsoft, at Meta, at Hood. Who else do we have today? We have Qualcomm, we have Affirm, not Affirm, sorry, we have ARM, and we have Fortinet. So there are quite a couple of big companies reporting today. And I think that we are seeing the sell-off broaden a little bit, especially around Ethereum. BMNR was, or at least around BMNR was, is Ethereum selling off as well? Because Ethereum was around in the 1950s during the earnings, or 1930s, sorry. And then now we are all the way back down. We have kind of rejected off the 100-day for the last couple of days in a row. So I would expect this to turn down and for momentum to really fall off a little bit. We might retest the 50-day and then get a bounce from there. So again, it depends on the clarity at I will be recording the BMNR video right after the live stream. But basically, based on what I found, we seem to have gotten 7 to 10 Democrats that could possibly help to vote the bill over the line. So we have to see what actually happens. All right, let me see. So that was one of the things that I got from the Federal Reserve meeting. Uh, well, okay, we have 3 minutes left. Let me go through a couple of other things that I want to talk about. He said that I think this Federal Reserve, at least with Kevin Walsh at the Kevin Walsh at the helm, they do have a little bit more economic knowledge. And the reason why I am saying that is because they were talking about supply shocks blunt the effectiveness of rate hikes. At least that is something that the committee recognized. I feel very encouraged by that. I think the markets were encouraged by that. And I think there was also questions about how, the markets are already pricing in higher rates. Is he going to raise rates according to markets? And he was quite adamant that he's not going to raise rates according to markets. They're just observing what market does. He actually likes it that the markets are already automatically trying to price in. Of course, yesterday, yeah. So that is something that at least on the rate hike front, he is giving himself a lot of leeway, a lot of room, a lot of excuses to not hike rates because markets are tightening conditions themselves. And as Lawrence has pointed out, yes, 30-year note hit highs not since 2007, and guess what happened in 2008. So I think basically we have what we got from that meeting is that he is a little bit reluctant to directly answer certain questions. Uh, we know that the Federal Reserve is looking to control inflation through inflation expectations, not just using rates. They know that rates are ineffective or less effective against supply shocks, which is exactly what we are seeing right now. And they are also not trying to be overly they're not trying to influence the market. They're not trying to hint to the markets about their actions. They're actually trying to observe the markets and then move accordingly. So he's saying that I mean, if every single time we had a shot for him using like the first meeting, it was task force. Like this meeting, he kept using the word function, function, function. I feel like every meeting he like has a word of the day. Um, yeah, of course, bond markets are saying that Walsh is wrong, and we will see. And I think Tom Lee is right on the money on this. He has been saying that the markets will test the Federal Reserve, right? So the markets are tightening conditions themselves. Kevin Walsh is holding steady. He's saying that we do not need to tighten, even though that is happening. Markets are adjusting the rates themselves. So for a moment during that talk, during this period, the markets were actually up on his commentary. And then after that, there was this final question. What happened to my air condition? There was this final question around inflation expectations, whether or not 2%. He spent the entire meeting talking about we are 2%, we are 2%, we are 2%. And then right at the end, he says that that's because the document says 2%, I will do it 2%. We are looking at PCE. Yes, all the components that go inside PCE, important, but we need more data than just whatever that we're looking at right now. What is that more data? Is he going to try and adjust or put something in that we are not sure about? Remains to be seen. All right. Right now, markets are closed. Let's take a look at a 30-year at 5.2%. Okay, so the bond markets are definitely not happy. Let me see if I got it. Do I have it on Bloomberg? Yes, stocks are crashing a little bit. All right. We have some commentary over here. I believe I can share this. I haven't really tried this before, so if this gets copyright strike, I will learn from it. But okay, so
Revenue coming
uh,
in above
Meta
estimates at
expects Q3 2026
59.36
total revenue
billion.
to be in
Second
the
quarter
range of
earnings per share coming in
61 to
below estimates at
$64 billion. We are seeing Meta
$6.18.
down
Family of apps
3% after
operating
hours.
income came in significantly
The
below
bubble ends to
estimates.
feel like a
Second
warm
quarter
dream.
Reality Labs operating loss coming in above
Okay,
estimates at $4.62
a
billion.
look.
Second quarter Family of apps revenue coming in again. Second quarter rather, Family of apps revenue coming in at $60 billion. The estimates were $59 billion.
All right. As you mentioned, though, shares of Meta platforms, we're looking at that stock trading down about 5% in the after hours. We're going to be looking for some commentary about the company looking to build out a cloud business. Let's go over to Microsoft. That stock up about 3% here in the after hours.
Yeah, we're actually getting that redhead. The company sees fiscal year capex 130 to
Microsoft up
145. It
3%.
saw
Okay.
125 to 145. This is Meta Platforms in terms of fiscal year capex 130 to 145. It saw 125 to 145.
All right, so let's take a look. Let's see whether we have gotten the numbers. Microsoft. Do we have? Okay, we have Microsoft details right now. So I'm sharing the screen. Microsoft is up 3% on the day. Is it? That's what after hours. That's what I heard. Okay, so we are seeing Meta down 8% after hours. Okay, ouch, that hurts. And Microsoft is up 4.5%. So let's see what commentary does is management going to give over here, and let's break down both numbers. Microsoft Cloud and AI strength fuels fourth quarter growth. Revenue $90 billion, increased 18%. Operating income $40 billion, increased 18%. Net income was $36 billion, that increased 31% on a GAAP basis. Okay, let's take a look at where is it? The statements. We will put this into our spreadsheet as I'm. Oh, and do we have Robinhood earnings out already? What is Robinhood doing? Let's take a look. Hood down 1% after hours. I mean, it's not too bad. It's a fairly muted response. Do we have Robinhood earnings right now? Okay, I don't see it yet. I still see Robinhood. No, I don't. Do we have? Okay, we do not have Robinhood's earnings yet. Is Meta's one out? I don't think. Okay, yes, Meta is out. Sorry. Meta is out over here. Let's see why is it down 8% and whether or not this is actually an opportunity. Congratulations to all of those who are in Microsoft. I know some of my friends from the office have Microsoft Leaps, so those should be doing well for them. Just give me a minute. All right. Let's see what happened to Meta. Operating margin 31%. Okay, that could be why your stock was down. Revenue $60 billion. Income from operations 31%. Provision for income, net income. So you had EPS of $6.18. The family of apps, daily active people was $3.6 billion, increase of 3% year over year. It's amazing that they have half the world on their apps and they are still growing at 3%. Ad impressions increased by 14%. Average price per ad increased by 12%. Revenue was $60 billion, increase of 28%. Costs and expenses. Okay, so total cost 42 billion, 2.4 related to legal proceedings. That's fine. Capital expenditures, including principal payment of finance leases, were $31 billion. Long-term debt, $83 billion. Like I would say that Facebook as an advertising platform is severely, severely underrated. I know some people who generate tons of leads from Facebook, and it's not something that people from the outside looking in, they tend to see. I think Microsoft, yeah. And to be fair, Microsoft was all the way up at 460 in June, so this is definitely well deserved. %90 short-term treasuries, right? Okay, what about capex growth? Are they expecting capex growth to be we anticipate 2026 capital expenditures, including payments, to be in the range of 130 to 145, narrowed from. Okay, so basically kept capital expenditures the same for Meta. We're on for a bounce, then roll over. I think so. I'm more worried about when we get to the fall, like end August, early September. Not going to be too excited about those times. So yes, I think like right now doesn't feel like a top. There's too much fear in the markets for it to really be a top. Like everyone is a little bit jittery. Usually the tops are when nobody is expecting it. So there might still be another leg higher to go. Okay, let's take a look at what the CFO said. We expect third quarter 2026. We expect third quarter 2026 total revenue to be in the range of $61 to $64 billion. Okay, raising lower end of our expectations of our expenses outlook. Yeah, okay. I think there's nothing much over here. They're not accelerating their capital expenditures, and I think in Meta's case, we already kind of did. So the question is, did that affect the rest of the chips sector? You are seeing AMD down 1%, Broadcom down 1%, Intel down nearly 2% on this news, Qualcomm down 5%. Okay, we got to see what happened with the earnings over there. SK Hynix down a further 2.5%. What is happening to our infrastructure plays? Nebius, CoreWeave. Well, CoreWeave is basically flat. I mean, it's down 9% today, so naturally it's flat. Nebius is down 1%. for me has become sell the rips, technicals over fundamentals. Yeah, I agree with you. I think this is really like I think CoreWeave has broken the structure, so I think we are going down further for CoreWeave as well. Iran again down 13% on the day to $29. That is insane. And to think that thankfully I sold it in the $50 ranges. And after I sold it at 50, I still felt like I sold it a little bit too early because it continued to run all the way up to $70. So selling at 54 at that point in time felt like a mistake. But thankfully, I sold at 54 because since then, yes, we hit 70, but after that, within the next couple of days, we did nothing but come down. So we are seeing a little bit of wind taken out of the sales. Oh my goodness, I didn't notice how bad it was today in the infrastructure side. We had Vertiv Holdings down 17%, Modine, liquid cooling down 14%. If you guys have been watching the stock draft that Amit and gang are doing, I believe Chris holds Modine, and that is down 14%. Applied Digital down 12% on the day. Wow, what a blood! But you know what? I really didn't notice it because after market open, I went to take a nap, woke up, went for a run. And my portfolio was up during the run because it was mostly my portfolio is largely in SoFi. So I really did not feel it as much as I'm looking at it now. Nebius down 12% on the day. Okay. Fabrinet down 7%, Lumentum another 7%, Arista Networks down 7%. Wow, Dell down 5%, GE Veranova down 5%. I mean, you got to understand that a lot of these companies, they have had significant run in the last 12 months or so. So yes, it is down, like for AMD, I don't think you can complain. Like AMD, yes, it is down from 580, but it is up from what, $200. You're still more than a double since April of this year. I don't think you can complain about that. For a lot of the infrastructure plays as well, Meta is recovering. We're at 560 now. Okay, Microsoft is giving up a little bit of that gain. So I mean, CoreWeave has been just chugging along like that for the past year. I feel like CoreWeave is undervalued. I might roll my $55 puts out, but I'm going to give it time to play out. I'm not too worried about it right now. Okay, so this is the one that I'm interested in because Bloom Energy yesterday, we also saw Bloom Energy actually release pretty good earnings. So I want to see what happened. Okay, let's take a look at Robinhood now and see whether or not we have gotten the earnings. Robinhood Q2 earnings are out. Let's take a look. What is happening with Hood? Hood is up 1%. Revenues up 32% on a year-over-year basis. Record 1.31 billion. Diluted EPS up to 62 cents. Net deposits record $22 billion. Tom Lee still sees S&P. I think that is likely the case. That is most people's assumption as well. I think the only thing is that when that is everybody's assumption, sometimes the market does something completely different. Transaction-based revenues increased 44% to $776 million. Oh, how come you guys are not saying this? Oh, sorry. Well, adjusted EBITDA 741, funded customer counts increased by 1.9 million to 28.4 million. That is, I think this actually shows you that it's very possible for SoFi to continue compounding their member growth by over 1 million members every single quarter. Total platform assets 32%. Net deposits, this is the one, were 21.7 billion, an annualized growth rate of 28% relative to total platform assets. And I know net deposits are actually is actually the North Star for Robinhood. They are trying to grow at 20% on a year-over-year basis. So 27%. Okay, that's fantastic. Robinhood Gold subscribers increased by 1.4 million, 39% year-over-year to 4.8 million. Average revenue per user, $187. Cash and equivalents, convertible note offering. Okay. They bought back 4 million shares in this past quarter, average price around $94. So that tells you that even at $94, they feel that they are undervalued. Thankfully, I got in at 70. This excludes the 290 million repurchase in connection with our June 2026 convertible note deal. Okay, so I think Robinhood has done pretty well. That is probably why they are trading up a little bit. I don't think the markets, I think the markets is in a very fussy place right now. You need to do a lot to really impress it. I wouldn't say we are doing much after hours. One of the cybersecurity stocks name. I'm not too sure if you guys have. Okay, I'm seeing. Yeah, I'm seeing some big movements in the cybersecurity space. There is a company called Tenable Holdings that I was looking at. They're down 10%. I haven't really looked at what into that company too much in general. HIMS is down to $24. Okay, sorry, that was my phone. Marvell down 6%. Oh, Lemonade is down. Oh, I like Lemonade. Oh, it's down 23% today. Wow. Why is it down 23% today? It doesn't make sense to be down 23% today. I didn't even notice. Actually, Lemonade is one of those names that I kind of stopped paying attention to it after it went all the way up to $100. At $100, it really didn't make sense. At $3 billion market cap right now, at $47, makes a lot more sense. HIMS is being sued by the government, okay? But Lemonade had always had a profitability issue. Let me fill in some of my Robinhood numbers. We have 10 minutes before the call, if I'm not mistaken. Am I right to say that? Let me just double confirm. The Robinhood stream is in 24 minutes. Okay, but I believe Meta's call is a little bit earlier. I saw 4:30. And I'm interested to hear what Meta have to say. So I think we will jump on Meta's call first for half an hour, and then maybe we will switch over to Hood halfway through. I am interested to see what the hell actually happened with. Yeah, we are not getting much from Meta. Let me give me a minute. All right, so let's see what's happening with the markets. Give me a minute. Let me just finish this. Well, Fortinet is up 9%, so that is strong. I think it bodes well. Cybersecurity. I think when it comes to the cybersecurity names, I think you just have to accept that if you want to participate in some of the upside, you just have to pay the premium. So I'm looking at what is a good price to actually get into companies like Rubrik. I've said for some time I like this name, and they just bounced off the 200-day moving average. So I'm always looking to see what I can do from here. Yeah, I totally missed this in the mid 50s. Who else do we have earnings? We have ARM. ARM is okay. ARM is flat. So does that mean their earnings were pretty okay? Hope so. Oh, let's take a look at Qualcomm's earnings. All right. Let me just hop on to Qualcomm's earnings and let's see. I really need to set up my Stream Deck so I can just press a button and get it to switch screens. Okay. For Qualcomm, let's see why in the world why are they down by so much? And by the way, Lawrence, Kratos, good name. Like it. I think it's starting to form a base in the low 40s. There's not much to go off if you're talking about previous support and resistance. I do see uh, I would say a pretty weak support in the mid 30s, but wouldn't be opposed to selling puts here. All right. Let's see what happened with Qualcomm and why in the world are they down? Oh, so the 10 Qs are out for Qualcomm. That's fantastic. Earnings presentation. Revenues $9.9 billion, EPS of 1.86. Let me see. Qualcomm expected. What were the expectations for Qualcomm? You know what? This is, I have done this so many times. I click on the link opens up a new tab, forgets to switch to the new tab. Qualcomm. Okay, so let's see. So Qualcomm revenue $9.9 billion was actually beat Wall Street estimates of $9.7 billion. I believe they are being taken down because of EPS. EPS came in a little bit light. EPS at $2.21 is actually missed their Apple deceleration faster than expected, probably. And I think that is coming up in their margins because you're seeing EPS $2.21. This is actually 2 cents. This is a slight miss on their expectations. I think handset chip sales fell 20%. That's what I am seeing. Did they break it down over here? Not really, right? Okay, they did. We estimate that the handset revenues from China's reach bottom in the third fiscal quarter and will return to double-digit sequential growth in the fourth quarter. So this is really a wait and see. If you believe that they can get through this is really just transitory, then of course this might be a pretty good buying opportunity over here if they do deliver double-digit sequential growth in the fourth quarter. So semiconductor. So I think this is why Kunal, you might be right. So I think it's the deceleration of Apple revenue happening faster than expected. I think it is China OEMs growth being slow as well. And then I also think it is their EPS actually missing expectations of $2.23. So right now they're trying to replace this with automotive sales, but automotive sales only $1.6 billion, if I'm not mistaken. Where do I see that? Yeah, so year-over-year growth in non-headset revenue in 2027 to replace total Apple product revenues in 2026. So they are expecting this 60% growth over here to completely replace Apple's line in their revenue sheet. I think that is fair. I really have to dive a little bit deeper into Qualcomm. It's always one of those names. Like I probably will not be buying it for the public portfolio. I ran out of cash there. I might look into it for my personal portfolio. Yeah, I mean it held today quite well. It touched 1480. Uh yeah, I think it touched 1480, and then I wouldn't pay too much attention to the after hours move, low volume and all that. I think the bounce was actually quite encouraging for me when it comes to SoFi, because I think it really shows that the main concern of the market really has to do uh, the main concern of the market really has to do with the interest rates. Give me a minute. I'm trying to pull up Meta's. Where is Meta's earnings? All right. We should be getting Meta's earnings pretty soon. Let me see. Okay, it's music right now. Once they start, I can see them loading the presentation. Once they start, I will hop on. You sold 1350 puts at the lows. I think that's a pretty good price. I already have like a mental target. Like I will not buy more SoFi unless it reaches $12. I already have too much exposure to SoFi. Yes. Okay, so we'll hop onto Meta's earnings in a bit. Let's see just what is happening with the markets right now before we actually hop onto the actual earnings. There's so many calls to catch up on. I will be listening to them today. Uh, and yeah, I will be trying to increase my output. Like I know you guys like it when I do deep dives into companies, but trying to change it up a little bit and have a little bit more variety. Wow, Robinhood is down 4%. Okay. Was there something I missed? I think sometimes, right, when you don't follow a company as closely, like for example, like I know SoFi's expectations, I know BMNR's expectations. For Robinhood, I don't really follow as closely because previously I never had a position. I just look at their earnings on a quarter-over-quarter basis. I follow companies like Alphabet uh, more closely than I do companies like Robinhood. So because of that, I can't really tell you why I did that. Okay, I will jump back on. Okay, I will be muting myself. I'll be hopping on the Meta presentation. Let's listen to what they have to say, at least for half an hour or so. Then I believe Hood is on at 5 a.m. Singapore time, which is in half an hour. We might jump on over there. All right, Meta Q2 2026 earnings Let's listen to what they have to say, and let's see whether or
Good
not
afternoon. My name is
we can say.
Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to Meta's second quarter 2026 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star, then the number 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to one question, and this call will be recorded. Thank you very much. Chad Heaton, Meta's Vice President of Finance, you may begin.
Thank you. Good afternoon, and welcome to Meta Platforms' second quarter 2026 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.meta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining today. We had a strong quarter for our community and business with 3.6 billion people using at least one of our apps each day. We reached several milestones. Instagram reached 2 billion daily actives. Threads crossed 500 million monthly actives, making it the fastest growing conversation app ever. Facebook has reached more than 2 billion daily actives for a while now. WhatsApp just hit an all-time messaging record, peaking at 30 million messages sent per second during the World Cup final. And also, Kunal Shah just joined as our new head of WhatsApp. He built one of India's most important payment companies and will be a great addition to the team. We also shipped some strong new models from Meta Superintelligence Labs and released new glasses. Overall, the scale and reach of our community across our apps is pretty remarkable, and it gives us a strong platform for delivering new innovations to billions of people. The opportunity in front of us is massive. First, we are now at a point where our investments in AI are accelerating every major part of our core business. They're improving the experience for people using our apps, driving better performance for advertisers, and helping our teams build new experiences and ship faster. Second, we are developing new personal agents that will be the foundation for our next wave of products and revenue lines in the months and years ahead. And third, we see a large enterprise opportunity to sell to businesses, including APIs, business agents, potentially selling compute directly, and other services that we're building for large customers. And I want to spend some time today laying out exactly how our investments are delivering results today and the opportunities that we see over time. For accelerating our core business, we are seeing strong and promising results in several areas. In Instagram and Facebook, I'm very optimistic about our work to integrate large language models into our recommendation systems. LLMs add a first principles understanding of what the content is about and why it is compelling, as well as a deeper understanding of what people are interested in and what their goals are when they're using our apps. So this means that we can show more relevant and engaging content that better reflects people's goals and interests. Our new Muse image and Muse video models will also dramatically expand the universe of content that people can discover across our platforms. There are already 2 large sets of content to draw from, first from your friends and the people you follow, and second from creators that you don't follow. But now there's going to be a whole new and nearly infinite universe of personalized content. This is going to make our services a lot more useful and engaging for people. For ads, we are using LLMs to improve how our systems predict and rank the ads that we show. We've expanded the context that we can take into account around a person's organic and ads activity to determine an ad's relevance, driving significant increases in relevance and conversions on both Facebook and Instagram. And on a dollar basis, our ads business is reporting faster year-over-year revenue growth than any other company's reported ad business. So these AI investments are paying off. We are also seeing a lot of demand for our new AI-powered creative tools. 9 million small businesses on our platforms are now using at least one of our AI ad creative tools, and we're rolling out new end-to-end creative solutions that help advertisers translate performance data into their creative decisions. Muse Image is going to supercharge this. The model can analyze images, improve its own work, and produce better ad variations based on advertiser input. We're getting great feedback on this so far. We also just launched Meta One, a new subscription offering that provides more tools and AI features across our apps. As demand grows, we're going to offer a variety of different tiers and pricing options there as well. And I'm also excited about how AI is helping our teams speed up product development. Earlier this year, we shipped Instagram Instants. We also just launched Forum, a standalone groups app, and Seller, a standalone marketplace app. And I expect it to become a lot easier to ship new apps. So we are planning to build out more ideas and use our recommendation systems to scale them to the people who will find them interesting, as we've done with Threads. It's been a little more than a year since we launched Meta Superintelligence Labs, and our trajectory is strong. In the last month, we shipped Muse Spark 1.1 and Muse Image. Since we rebuilt Meta AI and integrated Muse Spark, we have seen a 60% increase in the number of people interacting with the assistant each day, and that continues to grow quickly week over week. Muse Spark 1.1 is a strong agentic encoding model that is very efficient and excels at computer use, tool use, and multimodal understanding. It's available through our new public API, and we are ramping up distribution through partner channels and more coding agents over the coming weeks. We are also building out features to make it easier for enterprises to adopt Muse Spark, and that is an area that we expect to continue focusing on. One reason that we are so focused on making Muse Spark great at agentic capabilities is that we think that there's a very big opportunity to ship a few types of agents that are aligned with our mission and business. The first is personal agents. Soon, we will have agents that can work 24/7 on your behalf to help you achieve your goals and improve your life, your health, your relationships, your finances, whatever you want. The first domain that agents have really taken off in is coding, but engineers are more technical and willing to spend time making those agents work. So to build great personal agents, this needs to be a great consumer product that just works out of the box and is easy enough for billions of people to adopt and use. I'm very excited about this, and we're going to have more to share soon. As we move towards a future where we're all interacting with multiple agents, I think that WhatsApp and our other messaging surfaces are going to become increasingly important. WhatsApp is already the leading surface where people engage with Meta AI, and as we build out a platform for more agents across our messaging apps, we're going to innovate on how to deliver a private and secure AI experience. We launched incognito mode this quarter on WhatsApp and the Meta AI app, allowing people to have private conversations with their assistant that even Meta can't see. We're planning to make strong privacy and security a fundamental part of the agents that we're building as well. I'm also very excited about our progress with business agents. We made Meta Business Agents available globally this quarter on WhatsApp and Messenger, and there are already more than 1 million businesses using them to talk to their customers or complete sales every week. We're rolling business agents out on Instagram now too. One interesting thing about having an agent talk to your customers every day is that it learns over time and can bring all of those insights back to you. So we're building more agentic capabilities to summarize all of these conversations, digest what happened overnight, and surface what customers are asking for. And soon it'll go further, including suggesting ways to grow your business, giving you competitive intelligence and real-time insights into what's working and what's not. And over time, we'd like to build this into a business-in-a-box service that can help you start and run a whole business using Meta's platforms. In terms of how we will monetize these, we have a mix of subscriptions, volume-based pricing, and I expect that we're going to continue to evolve more of these products to be like our ad systems, where businesses only pay us when we achieve results for them. Over time, that will let us run an efficient auction over our compute, similar to how we do that for advertisers today. As AI usage in our products and businesses continues to ramp, we continue to invest aggressively in infrastructure to meet the demand. Yesterday, as part of our Meta Compute effort, We announced a new strategic venture with BlackRock to develop a new 1 gigawatt data center in El Paso, Texas. Overall, we expect that a significant portion of our compute is going to go towards training our models, growing our core business, and delivering personal agents and new products. But we also expect to grow a large business serving large customers as well. We've built our API, we're rolling out business agents, we're getting a lot of offers for compute at a significant premium over what we paid for it, and we have more coding and productivity tools on our roadmap as well. And we'll have more to share on all of this soon. As we get closer to personal superintelligence, we are also going to need hardware that allows you to seamlessly interact with it. Glasses are the ideal form factor since they can be with you throughout the day and they can assist you without pulling you away from the moment. Our glasses remain one of the fastest growing consumer electronics of all time, and we continue adding to the lineup. We just released our own line of Meta glasses in collaboration with EssilorLuxottica, including a style that we designed with Kylie Jenner. They're the first glasses to ship with Muse Spark out of the box so that they can understand what you're seeing and give even more helpful answers. Early sales have been strong, exceeding our expectations, and we're going to have more to share on our glasses lineup at this year's Connect conference on September 23rd, so I encourage you to tune in then. Before I wrap, I want to mention that I just published an op-ed about why I'm so optimistic that we are building a positive future for everyone. At Meta, we have always built technology to put power in people's hands so that they can connect with the people they care about and shape the world in the ways that they want. It's why we've always focused on making our products affordable and accessible for everyone, and it's a strategy that has served both our community and our business well. As we enter this next chapter, that same philosophy is guiding how we approach developing AI. We're the only major company building AI with the primary goal of putting superintelligence directly into people's hands. Rather than centralizing superintelligence, we're focused on distributing it widely and giving everyone the ability to direct it towards what matters to them. That's the way that society has always made progress. I think that these are the right values for building a positive AI future. And if we help build this, then I think that we will continue to build a very strong business as well. So that's everything I wanted to cover up front today. AI is improving our core business. It's making our apps more relevant and delivering better results for businesses. We're starting to deliver more novel products, and we'll have a lot more there soon as well. And we are investing aggressively because the potential is huge, and we know that there are many ways to deliver value here. As always, I'm grateful to all of you for being on this journey with us. And now, here's Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our segment results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total Family of Apps revenue was $60.4 billion, up 28% year-over-year. Q2 Family of Apps ad revenue was $59.4 billion, up 27%, or 26% on a constant currency basis. In Q2, the total number of ad impressions served across our services increased 14%. Impression growth was healthy across all regions, driven by growth in engagement and users, as well as ad load optimizations. The global average price per ad increased 12% year-over-year, driven by ad performance gains, improvements in macro conditions relative to Q2 of last year, and currency tailwinds. This was partially offset by strong impression growth, particularly from lower monetizing surfaces and regions. For the first time, quarterly Family of Apps other revenue reached $1 billion and grew 73% year-over-year, driven primarily by WhatsApp paid messaging and subscriptions revenue. Within our Reality Labs segment, Q2 revenue was $431 million, up 16% year-over-year due to strong growth in AI glasses revenue, partially offset by lower Quest headset sales. Moving now to our consolidated results. Q2 total revenue was $60.8 billion, up 28% or 27% on a constant currency basis. Q2 total expenses were $42 billion, up 55% compared to last year, and included $2.4 billion in charges related to legal proceedings and $1.2 billion in severance expenses in connection with the May 2026 headcount reduction. Year-over-year growth was primarily driven by increases in employee compensation, infrastructure costs, legal-related costs, and third-party AI token costs. Excluding the previously mentioned severance expense, growth in employee compensation was driven by technical hires we've added over the past year, particularly AI talent. The growth in infrastructure costs was driven by higher depreciation, data center operating costs, and third-party cloud spend. We ended Q2 with over 75,000 employees, down 3% from Q1. This total includes approximately 8,000 employees impacted by the May 2026 headcount reduction. We expect the majority of impacted employees will no longer be captured in our headcount by the end of Q3 2026. Second quarter GAAP operating income was $18.8 billion, representing an 8% decline year-over-year and a 31% operating margin. Excluding the Q2 legal charges and severance expenses, our second quarter operating income would have increased 9% year-over-year. Our tax rate for the quarter was 16%. Net income was $15.8 billion, or $6.18 per share. Capital expenditures, including principal payments on finance leases, were $31.1 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $784 million. We ended the quarter with $90.3 billion in cash and marketable securities and $83.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we continue to see significant gains.
I just read over here. Trying to take Cup Island finish the job. Are we seeing a ground decision? Okay, we will talk about this soon. Back to Meta.
Time spent increased 9% globally year-over-year and over 10% within the US and Canada, where it was driven by ranking improvements. We are finding that LLMs are increasingly capable of delivering ranking and recommendations gains. First, they make our existing systems smarter by understanding what the content is actually about and generating better training data. Second, LLM-powered agents are also helping with engineering development by evaluating content quality, detecting trends, and testing ranking changes. Earlier this year, we reached a milestone of every public Reels and feed post on Instagram being automatically processed through an LLM and analyzed across dimensions from topics to tone, and we're working towards including more surfaces on Facebook as well. These signals can then be passed to downstream applications across ranking, recommendations, and content policy enforcement, which is a key building block toward greater personalization. This quarter, we also began using our Muse family of models to conduct content understanding across signals like video topic classification and summarization, and we've seen positive early results. Finally, our recommendations are also becoming more personalized, surfacing more fresh content while giving people more direct control over what they see. On Reels, we shipped our largest single release ranking improvement to date, combining faster inference with a new architecture that draws on deeper user history to improve predictions. This drove a 15 basis point increase in sessions on Instagram, with particular strength in reshares and time spent, which are both strong indicators of better content to user matching. We are now bringing this to feed where early results look comparable. We are also getting new content to people more quickly. Investments we've made in more real-time infrastructure and modeling improvements on new videos are allowing our largest ranking models to now identify high-quality new reels at creation. On Instagram feed, over half of all recommended content is now less than 1 day old, more than double from a year ago. We're also giving people more direct control of the content they see. Today, Instagram users can visit the Your Algo page, which lets users write natural language prompts to tune their recommendations. Similarly, on Facebook, we launched Shape Your Feed. Early results show over 80% retention among users who engage with it. Looking forward, we're executing on our longer-term efforts to develop the next generation of our recommendation systems. This includes building foundation models that are designed to power organic content and ads recommendations simultaneously, as well as developing LLM native recommender systems. We hit our first research milestone this half by continuously pre-training a large-scale model with recommendations data and observing healthy scaling laws in the process. We're encouraged by this milestone and expect continued progress in the second half of the year. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, we continue to enhance our systems to show ads at the optimal time and location. In Q2, we also expanded availability of ads on our newer surfaces, including completing our global ads expansion on Threads. On WhatsApp, we have introduced support for more types of ad destinations and advertiser performance goals in status and continue on track toward our global rollout. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our services. Within our ad systems, we're delivering performance gains as we deploy more complex and predictive models. This quarter, we introduced Meta Generative Recommender, a paradigm shift in how our ad system works. Rather than scoring every possible ad individually, we are now using LLMs to reason about ad content and user preferences together and predict the best ad for each person. This makes our ad matching more intelligent and more precise, which compounds performance gains for advertisers. We deployed the first generative model into our ads retrieval system and saw notable improvements in ads performance. Early pilots using LLMs to better understand user preferences drove a 1% increase in app event conversions on Instagram. In Q2, we also advanced our user understanding models to analyze ads and organic activity and simultaneously improve both user experience and advertiser performance. Combined with our GEM model for ads ranking and sequence learning, these advancements generated an 8.3% increase in ad clicks and a 15.7% uplift in conversions on Facebook. We're also leveraging AI to empower businesses to more easily manage their campaigns, develop ad creative, and engage with their customers. Our AI-powered Advantage Plus end-to-end solutions continue to grow, reaching over $75 billion in annual revenue run rate this quarter. We're working to deepen adoption as advertisers who leverage multiple tools see compounding performance gains. I'll share one example of how Advantage Plus is making performance marketing meaningfully easier and more effective for SMBs. Underneat, an online apparel brand in India, had been setting up each campaign manually across Facebook and Instagram. After adopting Advantage Plus sales campaigns layered with Advantage Plus audience placements and budget optimization, they saw a 13% incremental lift in purchases and a 16% increase in add-to-cart conversions. Adoption of our GenAI ad creative tools continues to scale, with over 9 million small businesses using at least one AI creative tool. Image generation, which now lets advertisers produce more creatives at scale from existing content, including a new ability to create images from video assets, saw adoption more than double this quarter. We also introduced a new end-to-end creative solution that gives advertisers the AI infrastructure to translate real performance signals into their next creative decision while preserving brand identity and tone. We're building with agency integrations from day one so teams can diagnose, generate, and scale high-performing creative without leaving their existing workflows. Looking ahead with the rollout of Muse Image, we expect to further expand advertisers' ability to generate high-quality, on-brand creatives at scale. With Meta Business Agent, businesses are better able to serve their customers through our messaging apps by responding to inquiries, recommending products, and handling support around the clock. Earlier this month, we also introduced the Meta Business Agent platform, which gives enterprises the infrastructure to build, customize, and deploy their business agent at scale on WhatsApp. The platform provides larger businesses with enterprise-grade controls, guardrails, and measurement built in, so they can define rules and offer personalized experiences, starting within the messaging apps that their customers already use. Movida, one of Brazil's largest rental car companies with nearly 400 locations, deployed a business agent on WhatsApp to handle the entire booking flow, from vehicle selection and pricing to payment, in a single conversation. Returning customers could complete a reservation in as few as 3 messages. In a 1-month period, Movida reported a 44% increase in daily bookings through WhatsApp when compared to the same period in the prior year, and that 85% of conversations in the channel were resolved entirely by the AI agent without human assistance. We're also building out additional ways to monetize our ecosystem. 2 additional revenue streams are subscriptions and monetizing our competitive models through an API. Meta One is an evolution of our subscription portfolio to create more value for everyday users, businesses, and creators, so they get more features and AI tools to create, connect, and stand out. We are excited to bring this to more users and continue to build enhanced tools for our subscribers. We also recently launched a high intelligence model API at a competitive price and are encouraged by the initial results. We recently made Muse Spark available on OpenRouter for US-based developers, broadening its distribution and making it easier for developers to adopt the model. We soon expect to roll out the model API to more distribution channels, make it available in more countries, and open it up for enterprises. Our approach to building capacity is strongly influenced by several key elements. First, the broad environment for building infrastructure is dynamic and uncertain in both near-term and longer-term time horizons. The industry has underbuilt historically for the wave of AI adoption, making existing capacity, including our own, extremely valuable. Longer term, the supply chains need to be built out to support the capacity that we anticipate we and others will need for AI-powered experiences. Second, we have high confidence in our ability to utilize capacity.
All right, I'm going to leave this for a while because we are going to hop onto the Robinhood call soon. But just now, I'm not too sure how many of you heard what I said. We just got this tweet from this account that tends to repost whatever Trump says. He says, time to take Carg Island, time to finish the job. Wow, if that's the case, that could mean a land invasion. And this is something that the dude on the Diary of a CEO said is actually something that is a distinct possibility across the next couple of weeks. And this is something that we might be seeing right now. So if that happens, expect everything to come crashing down. So as what Lauren said, might be a decent time to buy some puts on certain names that are more high beta. The thing is, a lot of these names have already come down so significantly. Like, for example, CoreWeave, one of my newest positions, it's already down 60% from its all-time highs, right? So how much lower can it go? Maybe another 30% from here. That will probably bring it down to $50, 40 something, $50. Yes, he could order his next taco, his 40th one, and end the war for the 40th time. But I think the good thing that came out of this is that markets don't really seem to be reacting to that post. After hours, we are seeing the SPY just down 17 basis points, and we are seeing the Qs basically down 20 basis points. So we are not seeing much market reaction, but I think what we are seeing is, I think there's a little bit of fear in companies like SoFi, where they are slightly reliant on interest rates. So you are seeing this down. Yes, it was down 9% today, and then it's been down a further 7%. Let's pull this down. Let's take a look at. Okay, so CrowdStrike. I think the cybersecurity names are enjoying quite a day. I think largely carried by Fortinet. So I really do agree with the cybersecurity play during this AI cycle. I've always been like put off a little bit by the valuation, and maybe it's time to, yeah. I think it's really time to take a second look at what is a little bit more acceptable to me than some of the other names out there. Okay, is Robinhood Okay, from what I see, about to start on Robinhood. I'm still hearing our. All right, Robinhood is starting their earnings. Let's jump in, and then I'll give my commentary right at the end.
Wow. Thank you guys for joining. Thanks for the warm welcome. And it's awesome to see a packed house in here. We're back again at NASDAQ in New York City, taking a big bite out of the Big Apple with Shiv here and Chris. Largest audience yet for an earnings event. I remember Shiv last year, it was when we did the first event with analysts in person, and we were worried, would anyone come, and not too many people did, but the people that did had a lot of fun, and now I'm glad to see the word has spread. So it's really great to see shareholders, analysts, buy side and sell side, content creators in the audience here. It's been about 5 years, actually I think exactly 5 years since we rang the bell at the NASDAQ. And in that time, we've really accomplished significant growth, and we've delivered for our customers. In that time period, since IPO, total platform assets have quadrupled, and adjusted EBITDA has more than 8x. But one thing hasn't changed: why we exist. Robinhood exists to make everyone an owner. And I think that's a unique vision. I don't think a lot of companies are going after it. It's a powerful vision, not just for each individual customer, but I think also for society at large. I think that a society without ownership, broadly distributed, is very fragile. And we think broad ownership is essential to a free, stable, and prosperous society. Because when more people have stake in the outcome, more skin in the game, they're literally invested in the outcome. And we want more people to be invested in the companies of our great country. And I think we've just scratched the surface for what we can do there. To achieve our aspirations of making everyone an owner, we're focused on 3 things. Number one, being number one in active traders, which will allow customers to own any tradable asset. Number 2 is being the leader in wallet share for the next generation, bringing ownership to the entire family. So the whole family, and really lifelong ownership. And then number 3, building the leading global financial ecosystem, which is really about expanding the ownership that we've been able to contribute to in the US, worldwide. Billions of people around the world could benefit. So in Q2, our continued product velocity across these 3 arcs led to a bunch of records. On the active trader front, core business is humming, which drove market share gains and record volumes across not just equities, but also options and prediction markets in the quarter. Also, have to highlight, Rothera started supporting Robinhood prediction markets and has rapidly become a top 3 DCM, so top 3 designated contract market in the US. We also launched the first version of agentic trading, which allows customers to build AI agents to trade equities, options, and crypto, and to have access to Robinhood tools and features. We're very excited about that. So looking at wallet share, Trump accounts have officially launched, which is a historic step towards enabling broad financial ownership from birth. We're honored to serve as broker and sole initial trustee, helping millions of American children become owners of our great economy from day one. We also crossed an exciting milestone for the Robinhood Gold Card, 1 million cardholders. Yeah, that's a number we're very excited about. And actually, the Gold Card is now driving over 17 billion in annualized purchase volume. So it's being heavily used. I think a lot of people in this room maybe have them. Plus, $3 billion. We broke $3 billion in banking deposits since we began rolling out just last November. And all of this put together contributed to record net deposits. Customers are continuing to trust us with more and more of their assets, which in turn help drive total platform assets to record levels in quarter as well. Finally, global financial ecosystem, we closed our acquisition of WonderFi in Canada. We received our capital market services license in Singapore, and at our crypto and international event, The World is Flat,
I am on the Singapore.
we introduced a
basis, guys.
suite of products, including Robinhood Chain, which is the first chain purpose-built for real-world assets. And we've been seeing a lot of great initial traction on all these products, but in particular the chain. So we saw over 12 billion in DEX volume. So that's over 12 billion in trading volume on decentralized exchanges after launch, which made it one of the largest chains by transaction volume over the past week. It was also the fastest chain to get to 100 million transactions. I think we're well north of 150 million transactions at this point, which is very, very cool. Also, customers have deposited over $200 million into Robinhood Earn. So remember, Robinhood Earn is our stablecoin lending product that's powered by Robinhood Chain and our stablecoin USDG. So now it allows customers to earn 7% APY, which is a competitive rate. So 200 million so far, and it's just been a few weeks. Stock tokens, which I'm perhaps the most excited about. We're very excited about bringing ownership of real world assets to everyone in the world. Stock tokens are available in more than 120 countries, which allow many people around the globe to experience the idea of ownership. Tokenization makes it possible to expand exposure to high quality assets like US stocks to every single person with an internet connection. So if you have a smartphone, you have an internet connection, you can connect to our blockchain, you can get exposure to US stocks, and that's very exciting. Overall, we're now serving over 1 million accounts outside the US, and very much at the beginning there. So continued product velocity across these three arcs led to record results in Q2, record revenues of 1.3 billion. That's up 32% from last year. Record net deposits of 22 billion, which is a 28% annualized growth rate, and record gold subscribers of 4.8 million, which is now 17% attach rate relative to our net funded accounts. Now I'll hand it over to Shiv to discuss our results in more detail. Shiv?
All right. Well, thanks, Vlad. Before getting to the results, I wanted to share 3 big takeaways from the quarter. To start, the core business is going strong. So net deposits were a record 22 billion, a 28% growth rate, and we drove new records across equities, options, prediction markets, and margin. It's also great to see top of funnel growth picked up as we added nearly 1 million funded customers in the quarter. Second, this led to both record revenues up 32% year over year, but also another quarter of strong profitability with 57% adjusted EBITDA margins. So we're continuing to drive strong top line growth and profitability at scale. And lastly, we're dialed in on expenses. So we're lowering and tightening our outlook, even as our core businesses grew to new highs and we layered on new products. So let's review our Q2 results compared to a year ago. As we said before, revenues grew 32% to a record 1.3 billion, and this was driven by strong growth across the business. So transaction volumes increased to record levels across the majority of our asset classes, and we drove market share to new highs. Interest earning assets also grew, and we had records across margin, our credit card book, and also Robinhood Banking. And finally, other revenues were up as gold subscribers reached an all-time high of 4.8 million, and we started generating revenues for our work on the Trump accounts. And while product velocity continues to increase and revenues continue to grow to new highs, we also stayed disciplined on costs. So adjusted OpEx and SBC was 641 million, as we managed expenses well below our prior outlook range, all while including costs related to two new businesses, Rethera and Wonderfy, that were not included in our prior outlook. As we look to the rest of the year, while we're adding costs related to Rethera and Wonderfy, we also continue to get even more efficient in how we operate. And this is allowing us to both self-fund Rethera and Wonderfy costs, but also remove additional costs from the system. So we're lowering and tightening our 2026 outlook for adjusted OpEx and SBC to a range of 2.675 to 2.775 billion. We believe it is a competitive advantage to not only be a growth company that can invest for the long term, but also leverage our lean and disciplined operating model to self-fund a meaningful amount of these new investments. So you take it all together, the strong top-line growth and expense discipline we drove in Q2, it flowed to the bottom line. So adjusted EBITDA was 741 million, up 35% year over year, and a 57% margin. And earnings per share was 62 cents, up 48% year over year. So if we turn to capital allocation, there's a few top of minds. In June, we opportunistically raised 2.2 billion of capital to give us even more flexibility to invest for future growth. We believe we have a massive opportunity ahead of us, and the capital gives us even more capacity to go after it. And we raised this capital at attractive terms for shareholders, with both a 0% coupon and no net dilution until our share price exceeds $300. And even while raising capital, we are prudently managing our share count. Year to date, we've repurchased 7.5 million shares for 664 million. And as we said before, the denominator matters. So overall, we're really proud of the results we drove in Q2, and Q3 is also off to a good start. July average daily volumes compared to a record Q2 are in a similar area for equities, options, and event contracts. And July net deposits are tracking towards the $4 billion area, and this does not yet include deposits into the Trump accounts. So stepping back, we feel great about all the products we're shipping and the growth that we're driving. But we've also heard from some investors that it can be difficult to know which growth areas to focus on. So I wanted to share 3 areas that we think are important for measuring progress and success on our long-term vision. First, net deposits. Customers continue to trust us with their hard-earned deposits at over a 20% growth rates. As we drive strong net deposit growth, assets compound, and this leads to strong business growth. Second, Rule of 40. We're driving double-digit revenue growth with strong adjusted EBITDA margins, a combination that has made us more than a Rule of 80 company for the past few years. We think it's important to be both a growth company and a company that operates with strong margins. And all of this at our scale of over $5 billion of annual revenue, which is quite rare. And third, $100 million ARR businesses. We're excited to share we're now up to 13 businesses that have reached this level as we rapidly ship for customers, including 2 new more that we added just this quarter, Robinhood Legend and the credit card. As we build out a family of financial apps, we plan to add even more 100 million ARR businesses in the year to come. So if we keep making progress on these areas quarter after quarter, year after year, the financial results should follow and take care of themselves. And as we've shared before, our financial North Star remains the same: maximize earnings per share and free cash flow per share for shareholders over time. So before we move to Q&A, I'm actually going to turn it back over to Vlad to show us a few of these great products that we've recently built. Vlad?
Thanks, Shiv. I want to try something a little bit different, if I may. So a lot of you are probably familiar with our main app, but over the past few years, we've really expanded from a single trading app to a broader system. So what I wanted to do was just give you a little tour of some of the other family of apps that we've built and we've really been improving upon very recently. So here they are, our four apps. I won't show you the main one, but why don't we start with this one here, Trump accounts. So again, this has been an incredible collaboration between Treasury and National Design Studio, Robinhood, our teams, and BNY. And I believe it's the best digital experience the government has ever delivered. Actually, Secretary Besson a couple of days ago said this was like the best product launch that the government has ever done. And I think that's high praise because, I mean, NASA, I think, would be in that. Anyway, this is my kid's Trump account. So if you notice, you can select your kid there. One of the things that I think we've done really well, and maybe you'll recognize some of the design language and inspiration from Robinhood, is showing the magic of compound interest. And that's front and center. So you not only see the account values today, but you can see what happens by age 18. And you can even simulate, okay, if I add, $50 or $130 per month, what can we expect to happen with compounding to age 18? You can even see, age 60. So you extend it to retirement age. And what we really wanted to do was kind of illustrate how magical it is and get people thinking long term. You can scroll down here and you can actually get a feeling for the companies that are in the low cost ETFs. And then this is my favorite thing, contribution flow. So we have this awesome illustration and we make it super easy to contribute. So if you want to do $5, my Robinhood checking account is linked and you have this like coin animation that fills up your piggy bank. You can make it a recurring contribution. And actually the level of the coins in the piggy bank, this is a nice little detail, corresponds exactly to how close you are to your annual giving limit of $5,000. You can also share here. So there's a QR code you can easily share with friends or put on a registry or have for birthdays. You can share this link at the bottom directly too. And folks can just contribute without even having an account through Apple Pay, which I think is cool. Here's the educational content. And we try to make it easy to just go through and learn the basics about the stock market and investing. And that's the idea. There's plenty more coming. We think it can be the best charitable giving vehicle. So we're working hard on that. Michael Dell, as you guys know, gave a very large donation with his wife, Susan, and many others as well. We're working to make it easy for employers to donate. So there's a $2,500 tax-free employer limit per year, which Robinhood is participating in. And so if you guys don't have it, I definitely recommend picking it up and getting it for your children or grandchildren. And you should expect that it just continues to get better and better. So that's the Trump Accounts app. And again, great collaboration between Treasury, National Design Studio, BNY, and our team. Let's take a look at the banking app. That's the second one up here. We believe we're building the best digital banking experience in the market. You can get a sense of like the premium Art Deco feel. And we wanted to build a banking experience with no compromises. So usually other neobanks have sacrifices that you have to make from the experience being purely digital. But we want it to be a true private banking product. One of the things people love about it most is your APY. So we've now made it so that you can earn high APYs on both checking and savings just by setting up direct deposit and being a gold subscriber. So no minimums. And people really love not having to think too hard and concentrate on moving their funds back and forth to make sure the bulk of their money is earning the highest yield. So we just give you 3.5% automatically on every account. And customers love it. So far, about 40% of customers are signed up for direct deposit, which is a great attach rate. You can also see down here, we've got the rewards menu, which we've done a redesign to make it easier to get into. So 3% cash back, you can see you can upgrade to the gold card, and we have all sorts of other reward redemptions. And then down here, that's the family tab. So you can add family members. This is really the first banking product where the family is the first class citizen. And then all of your transactions are down here. So really, I think this is a key part of building a financial ecosystem for our customers. Customers direct deposit into banking. They can spend with their credit card. Cashback flows back into brokerage, which kickstarts or turbocharges their investing. And we make it incredibly easy to do that. Also, just one note, I'm not going to show this, but we just started rolling out the Platinum card, and it's looking really good. I think we've gone through a lot of the feedback that we had on launch, and I encourage you guys maybe after earnings to check out the website because it's looking really good. All right, let me show now the third one, which is the Robinhood wallet. So as part of our announcements that the world is flat, we launched Robinhood Chain Mainnet. And of course, a robust chain like Robinhood Chain needs a robust wallet to match. So let me show you how customers are using it. Now, I'll do a caveat. I'll show a lot of features that actually aren't available in the US. So these are really just ex-US products. So think of it that way. They're not available here, but people in over 120 countries outside can actually use them. So you'll see right away, similar design language to Robinhood, but everything is powered by crypto technology. One of the tabs we have on the bottom there is perpetual futures. And this chain, the wallet itself is well integrated into Robinhood Chain. So the chain is a first-class citizen. So here through our partnership with Lighter, you can, if you're an active trader outside the US, get leveraged exposure to not just crypto perps, but also commodity perps and single stock perps as well. And we make it easy to add funds, deposit, and withdraw and place trades. The other thing I'm very excited about is stock tokens. So here I'll show you what they look like. This is NVIDIA. So if you're a customer outside the US, you can get exposure to NVIDIA through stock tokens. And they have certain advantages over traditional stocks even. So they're tradable 24/7, including Saturdays and holidays. And you can even send it on chain. You can see the address. You can receive just like you would any crypto. And this makes it really easy to expand ownership worldwide. All you need is an internet connection and to be connected to the blockchain. And looking ahead, we're going to continue to push on this. We're working on adding lots more stocks and really pushing on tokenization of other real world assets. We have a lot of momentum here, so a lot to do. And there's plenty of other products in the pipeline. So we have our third annual Hood Summit in a couple months. The Engines of Creation live from Houston, Texas. So stay tuned for that. I think that will be very exciting. With that, Chris, unless you want me to show more apps, we can go to Q&A.
Thank you very much, Vlad and Shiv. For the Q&A session, we're going to start by answering shareholder questions from Say Technologies. And after the Say questions, we'll turn to live questions from our audience and then go to the dial-in participants. So I'm going to kick it off with our first question from Say, which should be joining us live. Zach, are you joining us?
Zach? I don't see him. Well, I do see a blinking cursor.
Hello, do you guys hear me?
Oh, there you are.
Hey, everyone. Happy to be here. Just wanted to know, what is the goal of Robinhood Social and when will it go live to the general public?
Thanks for the question. I also noticed you are on Robinhood Social, if I'm not mistaken. And there was some discussion on Robinhood Social about this question, so it's very full circle. Yeah, the goal with Robinhood Social is actually Robinhood up until now has largely been a tool to place the trade, but the idea for the trade would typically come from outside. So you'd get the idea somewhere from, the real world and then come and place your trade. And so we asked ourselves, can we actually help customers learn from one another? Can we take advantage of the large community that we built? And can we make it so that we can help you with idea generation? And so far, we're seeing great early signs. And one of the advantages that we have compared to other social media platforms is, since we have the trading data, we can make sure that everything is validated. And when you say you've made a trade, it's actually real. And you can see that the customer actually has the portfolio that they claim they have. So we're adding more and more features. The goal is to get it out to everyone by the end of the quarter. And what we're doing is we're just iterating and making sure everything, like the feed ranking algorithm, all of the functionality in the posts are tuned before we make it available to everyone. But we like what we're seeing, so we feel pretty good about rolling it out before the end of the quarter.
All right.
Wow. Yeah. Thank you so much.
Thank you.
All right. Thank you for your questions, Zach. Next question is coming from John.
Hey, John.
Hey guys, hey Shiv and Vlad, thanks for taking my question. Mine's on the Clarity Act, and I understand it's still moving through the Senate, so things could change. But could maybe, if something similar were to pass, could you give an idea of what would be the most impactful aspects of that to Robinhood, and if there are delays, any impacts as well?
Yeah, totally. I'll field that one. So I think the Clarity Act is very, very important, because while the current administration has been great and really is the first crypto forward administration that's embracing the new technology, we want the foundation of the industry in the US to be durable. So we don't want the floor to be shifting out from under us every 4 or 8 years, and new rules to be put in place. Or so I think that in order for the industry to really grow, stability from regulatory stability is necessary. And that happens through legislation. So we saw that with Genius. I think Clarity takes it one step further. And in particular, one of the things that we've been pushing hard on, as you saw earlier, is tokenization. We've been investing in our tokenized offerings. We think that's going to be a big industry. We're pushing that outside the US. You see some of the advantages already just in the past year, from like V1 of our tokenized products to V2. It's like now fully on chain. Now it's 24/7 trading. It's like you can send and receive, fractionalization by default. So there's lots of advantages. And we think it would be a shame if the US didn't get to benefit from all those advantages. So we're excited about that, all of the aspects of it. And we think Clarity helps take us one step further. But also, we're not standing still. We're pushing hard on our on-chain and traditional centralized products. And we're making sure we continue to innovate overseas in some areas, but otherwise, with Robinhood Earn and other on-chain products in the US. So we think we'll be good regardless, but of course, Clarity is going to be very, very important to making the most out of all of these products that we've been building.
Cool. Thanks for taking my question.
All right. Thanks, John. And the last question from Say comes from Joe.
Hi, Vlad and Shiv. Can
Hey,
you
Joe.
give us an update on early traction with Trump accounts since the July launch? Specifically, the number of accounts opened, assets flowing in, and how you're thinking about long-term contributions to net deposits and assets under custody?
Oh, yeah, great question. Yeah, we've been very pleased with the progress thus far. So 7 million children have signed up. We've seen over 1.5 billion in or nearly 1.5 billion, I should say, is the number of contributions into Trump accounts already. And again, that's before a lot of the philanthropic contributions have started flowing in. So yeah, we think that this is going to get to tens of millions, and we're working aggressively to do that. And obviously, contributions we believe will continue to grow very rapidly from here. And it'll take continued hard work. I think the great thing about programs that have success is people want a lot more things. They want them quickly, and I think with our partners, we're working hard to deliver. So on deck soon, making it so that employers can fund the Trump accounts of their employees, making a great philanthropic experience. I think for folks that want to donate and to be philanthropic, there's actually poor options available right now. There's not great options. It's kind of, there's no default option, at least. You have to evaluate charities. You have to figure out, are they being wasteful with their fees? Is the money actually getting to where you want it to get to? And I think this can provide a default, great, low-cost mechanism. So we're excited about that. And it's just the beginning.
All right. Thank you, Vlad. And that concludes the say portion of our Q&A. So we're now going to go to Q&A from our live audience. We ask that each person limit their questions to one, and please raise your hand if you'd like to ask a question. All right. Can we get a mic to Dan Dolev?
Hi, Dan Dolev at Mizuho. Congrats, Vlad. Congrats, Shiv. Amazing quarter. I think what surprised us the most on the positive side was the amazing growth in the funded accounts. Maybe you can shed some light on what part of that is structural, what are you doing, and maybe a quick update on the progress in Europe and how that is going. So very impressive there. Thank you.
Yeah, I'm happy to start with that one, Vlad, give you a little
Absolutely.
break.
Thank you.
So we said on the last quarter, we were making a concerted effort to regrow top of funnel. And as you mentioned, really great to see the progress. 1 million funded customers, the most we've added in a quarter, in nearly 5 years since the IPO. There was a variety of different vectors. So it wasn't any one thing. Really strong market backdrop, that definitely helped. We had a lot of new products that came out, banking, credit card, for example, those contributed. Strong organic growth. We also had the SpaceX IPO, which helped. We had an acquisition in the quarter, which provided a couple 100,000 accounts, and we continue to grow overseas. And so what it's showing is just the power of the ecosystem or the financial apps that Vlad was saying. And any given time, there may be a couple different vectors that are growing. And this quarter, we saw a lot of them hit at the same time.
Oh, I just said there's more to do. So.
All right. I think moving from the front row to the second row, Dan Finnan.
Yeah, thanks. So wanted to talk on prediction markets and how you're thinking about sustainability as we exit the World Cup, bridge to football season, just how you think about the long-term durability of this kind of asset class and what you're seeing outside of maybe some of the sports stuff related to macro or bigger events.
Yeah, absolutely. I mean, I think that the great thing about prediction markets is there's events all the time. I mean, you mentioned football season, that's coming up. There's also the midterms, which I think are extremely important. I mean, they're going to be a topic of discussion, and of course, customers are going to want to trade them and hedge their portfolios. Yeah, and there's events just on a consistent basis. So we're gearing up for that. We're making product improvements constantly. We're making pricing improvements. Rothera has gone live, and I think the World Cup was really a proof of concept there, and we're looking to scale that rapidly and make it much bigger, with the goal of providing great pricing to our customers. That's really how we think about it. Can we route to multiple venues with the goal of making sure as a customer, you get the best deal possible on Robinhood.
All right. Thanks, Dan. Let's next to Dan, and there are a lot of questions in the room, so we'll keep the mic moving around. So David Smith, do you want to take the next question?
Hey, thank you. In the past, you've spoken about how it's typical for new customers to come to Robinhood based on interest in one particular product and engage with you for more products over time as they become more familiar with your offerings. With the really strong prediction market engagement we saw in June and seemingly continuing into July, can you help us get a sense of how much came from existing prediction markets users, existing Robinhood customers who maybe were new to prediction markets, and also from new customers who joined Robinhood in the past month or two to transact with you in this product?
Shiv, how do you feel about that one?
Yeah, I'm happy to take it. So we've said before, when you come to Robinhood to do one thing, you tend to do more. A couple things we'll point you to. New customers still sign up for gold about 40 to 50%. So customers come in, their journey is they come for something: equities, options, prediction markets, crypto, banking. They discover gold, then they discover other products. What we're seeing is regardless of what product you come in for, you tend to sign up for gold and you tend to adopt others. So one thing we looked at, if you're a prediction markets customer, for example, you're actually more likely to have a retirement account with Robinhood. And so any vector you come in, whether it's banking, prediction markets, credit card, you tend to adopt others. And so I'd say it's just one of them that we saw were strong in the quarter. Banking was really strong. That's been a really nice new vector that's been coming in. Credit card as well. We said we have over 1 million customers there. Q1 and Q2, you still have a little bit of retirement season, so you saw some people coming from there. And then whether there's new events in the prediction market, such as the World Cup or the midterms coming in, they come there. The last number we shared was we had about 1.5 million people that have used the prediction markets. That number is now closer to 2 million, so continue to grow nicely there. But I think the main takeaway is it's across all of the different products, and people are coming in and adopting multiple products at the same time.
Yeah, on the marketing side, we continue to see strong ROIs, and it's diversified. So strong ROIs on prediction markets, but also gold and some of the active trader offerings as well. And I think we're in the fortunate position of having it be working really, really well across multiple fronts.
All right. Thank you. Next question, maybe Devin Ryan back in the front row.
Thanks so much, Devin Ryan, Citizens. Hey, Vlad. Hey, Shiv. Question, Vlad, you mentioned version 1 of Agentic, and obviously is still fairly new, but can you talk about like what you're learning with customers that are using that? How is their investment performance? Is there anything else interesting that you're seeing with their behaviors? And then how does that then map to version 2.0? I know you guys are very focused on bringing these capabilities to all of your customers, and that's probably where this becomes a much bigger deal for Robinhood. So how do we think about mapping that out and what that will look like and when? Thanks.
Yeah, I mean, since we're the first major platform doing this, we wanted to start fairly conservatively, right? So we started with stocks and also started with the Agentic account being separate from your main account. And so what you typically see there is customers fund it with a relatively small amount of money and link their agent. Of course, we've expanded it since then. So now options are tradable with Agentic as well. And we've seen customers do really interesting things, like they can put together really complex and sophisticated strategies. Crypto is coming soon as well. And you know, we're going to expand the toolkit to cover as much as possible from the entire Robinhood ecosystem. We've had over 100,000 people actually integrate and open up Agentic accounts, which has been very cool. Yeah, the AUM in Agentic, or the trading volumes, have also been growing, and that's been good to see. If in terms of friction, I think one piece of friction has been that not everyone loves, surprisingly, going to a Codex or a Claude Code and kind of stitching together these two apps. You have to have quite a bit of sophistication in order to do that. So, you know, we're thinking, how can we make that even easier? And also, in many cases, the models themselves aren't familiar with being used for trading. So sometimes they'll fight you and they'll say, well, I don't know, I don't really want to trade. And you kind of have to work hard to get it to do what you want to do. And yeah, we're hard at work addressing both of those things and other things.
All right. Thank you, Vlad. Next, let's go to Christian Blue sitting next to Devin Ryan.
Thanks for the question, Christian Blue, Autonomous. Vlad, I think you called out Rothera as a top 3 DCM. So I'm just trying to think through longer term how your vision around having a DCM, having retail distribution. Is there a possibility here that you could further build that out, whether it's perps or traditional futures, to take on maybe the top 2 DCMs out there?
Yeah. I mean, obviously, we're top 3 after 1 month, but the goal would be to keep growing that, right? We're not satisfied just with where we are after just a couple of months. And yeah, I mean, I think the roadmap on the Rothera side, not speaking for them because it is a joint venture, is to continue to grow, add more capabilities. Of course, you know, they're definitely focused right now on the prediction markets event contracts, but over time you should see that expanding. And in terms of you mentioned perps, we also have perps not just on chain like I showed you, but through our Bitstamp exchange overseas, where we've been rapidly increasing the scope of the perps offerings, now offering, you know, commodity perps. You should see that inventory should expand and grow over time as well. So I think our customers through the Robinhood retail apps will have access to the best products from multiple exchange providers, and you know, our job will be to stitch that together, make it really clear what the costs are, and also make those costs as low as possible for the customers. But you should assume that it's multi-homed and that, you know, the customers can get the best of everything.
It can also be a B2B business over time, so we can onboard additional FCMs. So right now we're laser focused on making sure the Robinhood customer gets a great example, but when you think out longer term, there's no reason why this can't be a large institutional business as well.
Christian, if you'll hand the mic right behind you to Ramsey, that'd be great.
Hi, Ramsey LaSalle from Cantor. Thanks for taking my question. Now that building on some of your comments and some of the prior questions, now that Robinhood Chain is live and thriving, how should we think about the broader DeFi roadmap for you guys? You've got obviously tokenized assets, Robinhood Earn, perps in your wallet I saw. What other on-chain services could be the next sort of growth opportunities? I'm thinking maybe like lending and borrowing or other yield generating type products.
Well, we already have that through partners. You can build, you know, lending and borrowing pools on chain. People have started building really interesting stuff. I think one of the really cool things about seeing so much volume, again, fastest chain to 100 million transactions, is you know, a lot of other chains have to do a lot of work to get third parties to integrate. I mean, we were fortunate to get pretty much all the major wallets and protocols to integrate with us over the past couple of weeks because they saw the volume. And then that in turn, when you're a developer thinking about what chain to build for first, you're seeing all this momentum, seeing all the wallets, and we've gotten a lot of developer activity too. We've been among the top chains in terms of developer activity. And yeah, some of the interesting things are developers building things that compose with the real world assets, the RWAs. So all kinds of things that utilize the stock tokens in interesting ways, in ways that we haven't thought of. And our roadmap will be, of course, making the infrastructure better and better, making the APIs cleaner. The block speed and block times are quite good. So it's a great chain for developers, but could continue to get better. And just adding in more RWAs, more stock tokens, expanding to all kinds of other asset classes as well, which we're already hard at work on. And, you know, we think that the unique thing is us supplying the RWAs as a key primitive of the chain, making sure those work really well, and then seeing what other developers can do to compose them.
All right. Thank you, Vlad. All right. So Ramsey, right behind you, James Yarrow has his hand up.
James Yarrow, Goldman Sachs. Thanks for taking the question. I wanted to touch a little bit more on perps in the US. What's the appetite to add them in the US brokerage? What are the hurdles to rolling them out? And I guess, are you looking to roll them out in the near term, CFTC approval permitting?
Yeah. So as you can imagine, we've been in conversations with CFTC and they've been constructive. And yeah, we are making progress. So I don't have specific things to share, but I think we feel really good about our customers having a great perps experience. And we already have it in Europe, so the work is not a large amount of work.
All right. Thanks. James, can you pass the mic immediately to your left? And this is
Hi,
a
I'm
fun game
Daniel.
of checkers we're playing.
Are there plans to add support for foreign stocks? Right now, investors have to buy ETFs to get exposure to certain foreign companies.
Yes. In short, yes. Obviously, it's on our roadmap. And over time, you should expect that as a Robinhood customer, you have, we not only want to give US stocks to customers all over the world, but we want to give foreign stocks to customers all over the world, including to the US. So we're going to build out a marketplace and a real, I think our common infrastructure could be a real asset there. Yeah, unfortunately, it's not one of those things I can just snap my fingers and we're connected everywhere, even though I try. But yeah, it's definitely top of mind for us. Yeah, and it's great to see customers always, the active traders always want more things. So we're always busy, and we love that.
All right. If you could pass the mic to your right and back one row. All right. Thank you.
Hey Vlad, hey Shiv. John from Artemis. Congrats on launching Robinhood Chain, 15 billion of monthly trading volume, 2+ million of monthly transacting users, I think close to 500 million of stablecoin supply.
Yeah.
What could go right with Robinhood Chain? Because you could offer the opportunity of having the Robinhood app to everyone globally. Like, what could go right?
I think a lot could go right. And thank you, by the way. I've been enjoying your content and your analysis.
Thank you.
Yeah, on X, it's been really good. Yeah, I mean, I think that we built Robinhood Chain to be purpose-built for real-world assets. I should clarify, I like memes as well. I'm like, yeah, you know, they always get a little upset at me. You know, Robinhood was one of the original, I mean, we kind of created this market in so many ways. So whatever it is you want to build, Robinhood Chain can be the permissionless home for that. Our unique contribution is the real world assets. And I think we're doing really the difficult work on the liquidity side, on the regulatory side, to make sure we safely bring all of these assets on chain and make them useful. So we started with a first set of stock tokens. We're going to grow that over time, make them fully DeFi enabled. And then we're already hard at work thinking about other types of real world assets that we can add. And I think you're already starting to see some of the activities. Developers are doing really interesting things that I hadn't thought of. And yeah, I think our job is to give them better and better tools to do it. And I think the enthusiasm has been great, but there's obviously much more to do. And we're never mistaking and confusing enthusiasm with complacency. So we know that we just got to keep building and making sure that it's the most useful chain for developers and all of our traders.
All right. Thanks, John. Can you pass the mic a couple of rows up to Craig? Thank you.
Hi, Craig Moore with FD Partners. If I could just ask a question about the quarter. You had disclosure in the deck showing that you're trending toward roughly 4 billion in net deposits. It's down quite a bit from June, and it's the lowest of the year. So I was wondering if there's any commentary around that, and does it have anything to do with, well, I was also want to ask about the health of investors considering the drawdown in semis and what's been happening in the market. Thanks.
Yeah, I'm happy to take that one. So our goal, as we said, is 20% on an annualized basis. I don't look at any particular quarter and month. There will be things that change from time to time. If you look at year to date, including July, we're still well north of that 20%. As you mentioned, we had a really strong Q2. Great to see the engagement. It will fluctuate from time to time, but I don't read anything into it. Net deposits have a variety of factors. It's what's going on in the macro. It's when do we launch new products. There is some seasonality. Summer tends to be a little bit slower. What promotions were going on. And so what we're focused on is, can we keep delivering for customers? Can we keep doing these new products? And then over the fullness of a year or even longer, we should be growing at about 20%. And everything we're seeing is that still happening. In terms of the health of the customer, very healthy engagement. And so our customers tend to be techno optimists. They tend to be younger. They tend to believe. And so they use some of these drawdowns as ways to buy. And so on down days or down months, we tend to see really strong net buying. That's what we saw in Q2, and we're continuing to see that. As I shared July, the average daily volumes are very similar to the Q2 average. So continuing to see strong net deposits there. And everything else that we're seeing is the health of the customer is very strong.
Yeah, and I'd say we have some good long-term tailwinds to that growth. So it's not just, the short-term things like promos and the macro, but we're building more durable engines of net deposit growth. I think banking has been a great success thus far, and it's still early. It's not yet fully integrated into the main app or the ecosystem. So I think we have more room there. Advisor network. I think that's the beginning of what could be a really, really strong RIA integration. And as you probably know, the RIA channel is a good, durable, consistent source of net deposits. We've been seeing good growth from multiple brokerage accounts. And then, of course, trusts is rolling out. So, there's a lot of people of higher net worth that use trusts and that have all of their wealth there. So I think as we keep adding these things and keep supporting, that should just be a long-term durable tailwind for our business and net deposit growth.
All right, Craig, would you mind passing up one row to Alex?
Hi, Alexander Baton here. Thanks for taking my question. So Peter Thiel once said, when asked if he regretted selling Facebook at a $100 billion valuation, that each 10x up to $100 billion he saw as equal difficulty, but $100 billion to $1 trillion he imagined would be significantly harder. In hindsight, Facebook's move from $100 billion to $1 trillion may have been its easiest 10x because it had already reached scale.
I like where this is going.
As Robinhood approaches that $100 billion market cap, how do you think about the difficulty of the next 10x? Could getting from $100 billion to $1 trillion actually be the easiest because the scale and operating leverage you've built? What will it take for Robinhood to surpass market caps of legacy financial institutions? And do you see AI supercharging your global domination plans?
I've got some board members in the audience too. I think getting to $1 trillion will be very, very difficult. I don't think a financial company has ever hit $1 trillion market cap, but I think it can be done. As you mentioned, there's a lot of new things that are changing rapidly that I think we're on the forefront of. So it's not just growing our brokerage business and expanding it internationally, but it's also agentic finance. And can we build great tools for agents? And can we see a world where that just a lot of the activity, if not the majority, goes in that direction? We're building for that. Can we use the early success of Robinhood Chain to actually make all assets, make everything that you have in the U.S. available to billions of people worldwide, and then we benefit from the tailwind of the rest of the world getting wealthier, and the rise of the global economy as well by giving them access to things. Private markets, I'm very excited about, and we've seen Robinhood Ventures Fund 1 and now Robinhood Ventures Fund 2, which is beginning the roadshow. So we have the prospectus live. That one focused on early stage. And the goal really with Robinhood Ventures is for us to be there for individual investors to have exposure to companies at the earliest possible stages, but really across the entire life cycle, including early stage. Yeah, and so I think putting all these things together, I see multiple axes that the company could 10x, and I think we're going to pursue all of them.
Yeah, we don't comment on the stock price specifically, but if what we've said before is we believe we can 10x the business over the next 10 years, and that's through a lot of the vectors Vlad shared. When you look at assets are the greatest predictor of what's going to happen in financial performance. We're super excited. We're nearly 400 billion today. But if you look at some of our competitors, they've got to tens of trillions of assets. So there's no reason you can't do that. And that's just the core brokerage. Then you go to retirement, which is even a multiple of that. Then you go into banking and crypto, which is even multiples of that. Then you go international. Then you go to B2B. And so everywhere you look at it, it's pretty unique. When most companies go to their adjacent businesses, they tend to be smaller TAMs. For us, it's actually the opposite. As we go to some of these adjacent businesses, they're actually larger. So that allows us to grow. We actually build a 10-year roadmap. And so we have, we look at what we want to do, not just over the next 1 year, the next 5 year, over the next 10 years. And if we execute on that, we have a really cool opportunity in front of us.
And I'll just add that it wasn't long ago that Apple was the first company to hit $1 trillion, and we didn't think it was, that all these companies would be, and now there's $5 trillion companies, and soon we'll have $10 trillion companies. I have no doubt Robinhood will be a $1 trillion company.
Well, thank you.
All right. Let's see. Ahmed, do you want to take a question?
Vlad and Shiv, congrats on a great quarter. I don't know how I'm going to follow up that question.
Congrats on a great hoodie.
It's a nice one here. Very, very nice. Yeah, I mean, look, I think what I'm observing in the quarter, especially as someone who's been kind of looking at the business and the trajectory over the past 5 years, is just really strong engagement. AUM at almost 400 billion. You're seeing the gold attachment rate at 17% of subscribers that are their all-time high on gold subscribers. I guess my broader question is, why do you think the engagement is becoming so strong? Why do you think customers are so willing to adopt the credit card, agentic services, try out meme coins on the Robinhood chain? Like, what about the flywheel is working? And what do you think you can do to sustain that flywheel working for the next 10 years to hopefully get to that $1 trillion market cap?
Yeah, I think that's a great question. I think that first off, the products have to be good, right? I mean, we've rolled out a lot of good products. I think the credit card has been really great. Value props hard to argue with. 3% cash back on all categories, great UI, virtual cards experience is really, really good. And it hasn't always been. Not all of them. We haven't batted 1,000, right? We've had many versions of the debit card and cash management. If you remember, McDuckling, we called it. It had various iterations before we found success there. But I think what we found is there is a flywheel, right? We get a customer in, they become a gold subscriber. They after they become a gold subscriber, they look out at all the different products we offer. If those products are competitive with what's on the market or better, they'll adopt them. And then a decent chunk of their earnings, if we get the direct deposit, go into Robinhood. And they spend time on the platform. They use us for a lot of our customers use us for everything. And so when we add something new, they're likely to see it and take advantage of it. So I think what we have to make sure that we do, and this is not an easy problem, is putting the right products in front of the right customers at the right times, making sure the entire experience is coherent. And that's actually becoming a hard problem because the app is constantly changing. And so the orchestration of all of these things into one story, into one financial tool is becoming an increasing source of focus, because I still think we could do better there. And making sure that all the individual pieces, even if you're not using 10 Robinhood products, each individual one should be world-class as well. I think if we can deliver that, all the individual pieces, and then stitching them together nicely, there's plenty more room.
All right. Thank you, Vlad. As much as we've had a lot of great questions in the room, there are even more people on the phone. And so we're going to start now and shift over to the Zoom Q&A. So the first person asking a question On Zoom is Steven Chubak from Wolf.
Stephen.
Hey, good evening, Vlad and Shiv, and thanks for taking my question. Sorry I couldn't be there in person.
You're missing
Wanted
out,
to-
man. There were look at the.
I know. It's always a fun time, so sorry I couldn't be there. But wanted to ask on the updated expense guidance. At the start of the year, you guided to 18% expense growth, of which 10% or a bit more than half of the growth was really earmarked to support new product launches, 5% to support the core business, 3% for acquisitions. There have been a lot of moving pieces underpinning the new expense guidance. So just wanted to better understand how the buckets have evolved under the new guidance and whether it still contemplates a similar level of investment to support some of the more nascent growth initiatives.
Yeah, great question. I think the really exciting part is we are able to self-fund a lot of the growth initiatives, so we are still growing. That is not changing. You know, Vlad just shared a lot of the different products and apps we're working on, and so we are still a growth company. But the nice thing is because we run lean and discipline, we can self-fund a lot of these. And so you mentioned the three different buckets. The short answer is the savings are coming from all of them. So a little bit's coming from the M&A. We're being a little bit more efficient. The new M&A actually wasn't even included in those, so we fully self-funded those. On the core business, the teams are really working hard to make sure they're delivering fast, but also doing it efficiently. So we had some savings there. And then in the new seeds, not only are we making sure that we invested what we started the year, but we've actually added some even relative to where we started. But we put it all together. We're halfway through the year. We're trending well. Our lean and disciplined nature is showing through. So we thought it was the right time to do it. But I think the takeaway is we are still growing, but we're just able to do it more efficiently. And so now is the right time to lower our outlook.
All right. Thank you, Shiv. The next question is from Craig Siegenthaler at Bank of America.
Vlad, Shiv, hope you guys are doing well. And Chris, nice job on emceeing this event.
He's a star.
Thank you, Craig.
Robinhood just received the MAS license in Singapore, so congrats on that. I think you also have two small brokerages that are live in Indonesia. So, the question is, where are you in the product rollout in Asia? What will the rollout look like relative to the US offering? And also, what countries can you passport into from Singapore?
Yeah, and again,
That's a
just
very
to
good question. I
clarify,
want to
this
know all
is
those
for
things too.
our centralized offerings. Now that we have the chain and all the DeFi offerings, we're live in a lot of countries with that. But for the centralized brokerage offerings, we did get the approval in Singapore. We are working hard to bring everything that we possibly can within obviously what's permissible by regulators over at MAS over there. And I think what we've learned from the UK is it's better to get more at once rather than just launching equities, following up with options, then launching margin. So I think what we're trying to do in subsequent launches is get more of the overall Robinhood ecosystem live at launch. So the team's been working hard on that. They're
That's
getting
what I want to
close.
hear, to be honest.
And I think that's generally the strategy you should expect us to take in other regions. And again, Singapore we anticipate to be the Southeast Asia and the APAC hub, so we'd be able to passport there from there to lots of other countries in the region. And some of them, like Indonesia, will get direct licensure, depending on just where we see opportunity to go even deeper locally.
All right. Thank you, Vlad. The next question is from Alex Markgraf from KeyBank.
Hey guys, thanks for taking the question. Maybe one for both Vlad and Shiv on Robinhood Chain and the DeFi product expansion. I'm curious how you think, Vlad, about how the effort to engage with customers and the touch points change in DeFi products. Does it sort of force you to reevaluate how you interact with customers and capture the minds and wallets of customers? And then Shiv, just on a related note, would be curious if there's anything you can share from a monetization standpoint on how we should be thinking about those relationships versus the sort of CeFi relationships that exist today. Thanks.
I guess I'll start with how to engage with the customers. I mean, my observation is a lot of those customers hang out on Twitter and listen to podcasts, which are two areas that I'm somewhat active in already. Much to the chagrin of the great comms and legal and compliance teams that we have. Yeah, so I don't really see a problem. Yeah. But we're always looking out for more. I'm not so active on TikTok. I don't really. Maybe I'm too old. Maybe I'm too boomerish for that. But if I have to, I'll do it. You know.
No, it's been fun.
I'll do the little dances or what are they?
Yeah, sure. The engagement, as Vlad said, it's actually coming from developers themselves. So when you build a great product, people have to find it. That's one of the beauty of Robinhood. If we launch a great product, just given our scale and distribution, they tend to do well. And then this has just been another example, whether it's DeFi or permissionless or centralized. On the monetization piece, per transaction, we make a few basis points, not per volume, it's per transaction. Now it varies depending on the size of the transaction, but just think about it as a few basis points on average. And then we do share, approximately half of it with Arbitrum, who's the level 2 that we built on top of. And so when we starts to get larger and it goes through a couple quarters, we'll break it down more specifically. But think of it as a few basis points on transactions, than a 50-50 a rev share.
All right. Thank you, Vlad and Shiv. And we'll see some of those dances later, Vlad. So the next question comes from Brian Bedell at Deutsche Bank.
Great. Thanks. Good evening, Vlad and Shiv. How are you?
Doing well.
Excellent. My question's on Rothera, and with specifically the company financial KPI contracts with SIBO, filing with the SEC to launch these potentially in the near term. What's the interest in Rothera launching these, in the near term? And then also just in terms of migrating more of the event contracts at Hood now to Rothera, such as NFL, how are you thinking about that game plan for the rest of the year?
Yeah. So on the CBOE financial KPI contracts, so my understanding is those are under the securities-based regime. So I don't know if Rothera would be launching those right now, but obviously, Robinhood is able to connect to a wide variety of counterparties. We have a brokerage business. We also have our FCM business, and of course, Rothera is, a great joint venture that we have with SIG. So that doesn't necessarily mean that we're not going to make all of these products available to customers. I think the products in general are useful. There's interest, and so we always evaluate opportunities for adding new things to the platform.
And then in terms of the flow, what we've shared is, you should expect in the near to medium term, more than the majority or a good portion will flow through Rothera. We're still making sure it can scale, and after 1 month, it's already doing tremendous volume. But yeah, you should expect that more and more of it will start to go through there.
All right, thank you. The next question is from Patrick Moley at Piper Sandler.
Yes. Hi, guys. Thanks for taking the question. Vlad, I just wanted to follow up on your earlier answer to James's question on perps. I'm just a little confused why you all are not being more aggressive with launching perps in the US. I think a little over a year ago, you submitted a comment letter supporting, CFTC allowing perps in the US. They've opened the door now on a number of products. You have a few of your competitors who are either live or they're moving in that direction. And, what they're really trying to do is become more of a multi-asset class platform so that they can compete, more closely with you. So could you just elaborate on what the source of hesitation is with perps in the US? Are you worried about leverage? Is this, are you worried about cannibalization of other products, or is this a deliberate choice to let others take a regulatory first mover risk? Thanks.
Well, no, I don't think it's any of those things. I think we're in some ways in the fortunate position of having lots of great products that we see huge opportunity in, right? And so the roadmap, just a couple weeks ago, we launched 13 new products that we're in the process of rolling out. And as Shiv mentioned, we had 2 new businesses just in the past quarter get to 100 million ARR or more, and we see a lot more coming. And we have perps live in overseas as well, both through our DeFi offerings and through centralized. So I wouldn't take that to mean that we don't like perps. In fact, we like them quite a bit, and we intend to offer them to our customers. I didn't give you a timeline, but I wouldn't take the absence of a timeline at earnings to mean that we don't intend to be aggressive. I just don't like giving timelines and earnings. That's what our events are for.
All right. The next question is from Ben Budish at Barclays.
Hey, good evening, and thanks for taking my question. Shiv, I was wondering if you could unpack the July commentary a little bit more. You said ADV was trending similar to Q2. I guess on a product by product basis, equities, options, should we assume that that's equities similar to Q2, options similar to Q2? And then any color you could share on the take rate. I know particularly for options that one bounces around a little bit. Crypto you didn't include in that commentary. Curious, not to make this a multi-parter, but what drove the fee rate improvement in Q2, and then similarly what you're seeing in Q3. So sorry for squeezing a bunch in there, but yeah, any color there would be helpful.
Yeah, happy to, and I'll try to make sure I hit all of them. First, the way you read it was correct. So for July, the ADVs for equities, options, and prediction markets are all in the similar area of Q2. So those are seeing pretty healthy engagement, all of those. In terms of crypto, it's probably a little bit slower than what we saw in Q2, and so it's early in the month, but that's what we're seeing to start. And then for take rates, for July, they're in a similar area to what we saw for the Q2 average. So I would use that as kind of your starting point. For what drove the improvement, take rates are an output metric. There's a lot of different things that go into them. And so, for equities and options, it's mix shift, it's volatility, it's the type of contract. For crypto, it's institutional and it's what tier. So lots of moving pieces, but big picture, July is off to a similar zip code for take rates, and then for most of the asset classes to the Q2 average.
All right. Thank you, Shiv. The next question is from Ed Engel at Compass Point.
Hey guys, thanks for taking my question. We know that you're pretty focused on bringing more of the volumes onto Rothera within prediction markets, but we did see some news reports that you're exploring some partnerships with some other exchanges as well. Just kind of high level here. I mean, do you see any opportunity to kind of improve your economics by partnering with different exchanges, or is the focus more to bring more activity just onto Rothera?
It's both, and I think we're invested in Rothera, and we think that the economics there are great, and we intend to push more flow there. At the same time, we've always been connecting to additional counterparties. We first connected to ForecastX, which is IBKR's DCM. Then we went to Kalshi, then of course Rothera, and so we always are on the lookout for diversifying, making sure our customers have access to multiple options, and we're not reliant on any one individual counterparty.
All right, thank you. The next question is from Andrew Hardy at BTIG.
Hey, Vlad, Shiv, thanks for taking my question. Sorry I can't be there in person. My wife's due next week, so probably
Congratulations.
here, but looking forward to setting up a Trump account very soon.
Got to do it.
Just wanted to follow up on the top of funnel question. Vlad, you said earlier there's more to come. Would love to just kind of hear areas you're focusing on for customer acquisition strategy and focus areas, just generally speaking, going forward there. And then just another part of that, with the pattern day trading elimination or rule elimination, did you see any benefit in the quarter? And is there anything you're doing to try to draw back customers that you might have lost in the past? That'd be great. Thanks.
Yeah, maybe I'll hit top of funnel. You can talk PDT. I think there's a lot of improvements to the product, making sure our onboarding is really clean, particularly as we get more and more products, and you can sign up for multiple accounts, multiple assets. I think we've been spending a lot of time investing in that. Getting customers to share the product with other customers, there's always opportunity there. And of course, we're also looking into, as banking is scaling and we're seeing traction there, as the card is getting north of 1 million card holders, can we make it even easier for folks signing up for brokerage to get the card and turn that into an active driver of growth in the other direction, meaning customers that are getting the card and coming for banking, can we get them into brokerage? And yeah, a lot of those are opportunities that we haven't really explored up until now. So there's just a lot of things that we have conviction in that remain in front of us.
And in terms of the PDT, as a reminder, we're very pleased that the SEC removed the antiquated rule where small balance customers were penalized for the way they're trading. And so really excited for customers there. It was a nice tailwind in June when the rule went through. I think what we're seeing is it's broader across the whole industry. So for regardless of what brokerage, we probably had an outsized benefit relative to our peers, given our customers have smaller balances. And what we're seeing from customers is they're still continuing to come back and adopt it. And so I think it's going to be something that we continue to see a tailwind for, not just this quarter, but in coming quarters. And it's too early to tell what's exactly going to be, but big picture, customers are using it, they're coming back. And we're already seeing it in NPS surveys and other methods like that, where customers who had left are really pleased they're allowed to trade again.
All right, thank you. The next question, I think, is from Mike Cypress at Morgan Stanley.
Mike?
I think we're just loading and connecting. Oh, sorry. Sorry, I was my mistake. Chris Allen at KBW. Or perhaps not Chris either. All right, we'll try one. We'll try one more and see if we can get into the Hall of Fame. So going 1 for 3. Next, we have Gav from Wolf Financial.
Hey, Vlad and Shiv. Great to see you guys.
Hello. What's up, dude?
What's going on? My favorites. Doing well, doing well. Super excited to be on here. I wanted to talk for just a second about AI agents and agentic trading. This to me is one of the most fascinating things that you've rolled out in a long time. I've already hooked it up. I've got Claude in there trading, and I could really see this driving additional volumes as it goes on, right? People set up strategies. Now it's trading with them, not even having to be there. And I'm really curious, milestones that you're looking forward towards in terms of agentic trading, and if you think that this could truly swell volumes really beyond the human side of trading. And then in a second part of that, I am curious if you are going to give the AI agentic trading access to prediction markets.
Yeah, I mean, on the product side, the goal is to give it access to all of the tools that you would have as a human trader using Robinhood. So it's interesting for us because Robinhood's been kind of traditionally pretty closed off. We've been constraining access through our interfaces. Now we're opening it up. So traders and developers will get access to all of the capabilities where it makes sense. And yeah, I'll just say that the team has really been cooking on the agentic stuff. I mean, we've got lots and lots of things. We were early to market, but I think there's so much more that can be done. So we look forward to sharing more, including at the Active Trader event that we've got coming up.
Looking forward to it.
All right. I think we can finish strong here. So Vlad, would you like to offer any closing remarks?
Well, first off, thank you for all the engagement, both from institutional, sell side, retail, and our content creators. I'm really proud of the community here that's coalesced around the company. And you should know, as always, the team's been working incredibly hard. The roadmap is really full, and there's a lot to do. So hopefully see some of you at the next Hood Summit. in Houston, Texas. Thank you.
All right. So while they were talking, I was actually filling up the Robinhood spreadsheet that we have. So I just want to very quickly summarize the results. I think there are a couple of things before I dive into Robinhood. I just want to talk about a couple of things that we have seen. Now, number one, Meta. Let's see where we are trading at right now, because I think for Meta and for Microsoft, what we are actually seeing is that they are not giving future guidance on their capital expenditure. At least in Meta's case, Microsoft is up 7%. So this has definitely got to do with their disclosures. But I think in Meta's case, there are a couple of things. I feel like Meta is finding it a little bit difficult to raise money. They're at a point where their cash flow is negative. They have taken on already so much debt. If they want to continue taking on debt, I believe that they are going to face some problems with the capital markets. Like, I don't believe that they can keep raising debt at this kind of rate. I saw somewhere that I think the markets are now okay. If Meta does get a credit downgrade, I think they are looking at having to pay 7% cost of debt. And I think that is why you can see Meta is down 8% today. Microsoft, on the other hand, is up 7% on the day. And for a company that is $2.9 trillion, I really think it's about time. We've just seen Microsoft trade at 460 not too long ago, so this really isn't too big of a jump. And if you think you missed out Microsoft at 460 here, I mean 420 is still a fairly decent level for Microsoft. We are still down $130 from all-time highs of 550, and you still have a kind of 10% margin of safety in a sense if you are talking about from the recent highs. So I will dive deeper into Meta and Microsoft capital expenditure, but this is not what I expected actually. I think it'll be interesting to see what Amazon report tomorrow. I mean, Apple, we know, I don't think anybody expects Apple to be spending much on AI development. Of course, we just want to know what the Apple CEO has to say. But in terms of capital expenditures, I'm surprised that Microsoft is not it's not going to be spending as much, or at least not giving concrete guidance. And I think this is very different from Google. And maybe in a sense, you can say that that is why we are seeing, GCP, Google. I mean, there is levels to this. Microsoft Azure, 48% year-over-year growth. 42%, is it? 42, 48. Let me go and see. I was just writing this down. Okay, Microsoft did not give 2026 guidance on CapEx. Okay, I'm just going to very quickly before I dive in to Robinhood. So in terms of Microsoft, what we are seeing is that Azure is up 43%. It's going to be interesting to see how much AWS is up. But this is highly, highly different compared to what we saw with Google. We saw GCP up 82%. Yes, definitely GCP is newer, it's smaller, and all that kind of things. Yes, but still, it is double the growth rate, right? So I think that definitely what we are seeing is maybe a sign that Microsoft is being a little bit more cautious. So I'm not too sure. Are we seeing this slowly develop? And this is very, very early. And right now, they're just not increasing their capital expenditures. But could we be seeing that, Microsoft is just happy to defend what they have right now, and this becomes a two-horse race between GCP and AWS? Because Google is aggressive. Google is saying we are increasing our capital expenditure to 195 to 205. Stock take a hit, and then they say that they did not give guidance, but they said that we are going to significantly increase this in 2027. Very different approach to Microsoft. Could Microsoft be coming under pressure from investors because they have been in this non-stop downtrend since July of last year? So basically, for one entire year, Microsoft did nothing but go down. So if you're one of those that got into Microsoft at the 350 regions, congratulations. That was a fantastic place to get in. And maybe what we are seeing is that, some of the build-outs are finally starting to reach a level where they are comfortable with the kind of capacity that they have. And maybe a lot of this has to do with recent developments in the AI frontier models. So I think this is going to be a very interesting market. There is an argument that CAPEX spend has been driving the US economy. Without it, US may fall into a recession. That is something that Kevin Walsh is also looking at, and that is likely why he is hesitant to cut rates. And we know Kevin Walsh's style. If the US enters a recession, do not expect him to bail out the economy. He is not that kind. He will just ride through the pain because, as you have heard during his call, he is more interested in the long-term trajectory of the country. He's more interested in what the Federal Reserve can do to preserve that long-term trajectory rather than try and make micro adjustments on a 6 to 8 week basis every FOMC meeting. So that is what we are seeing right now. So we have had a couple of bearish news come out recently in the AI trade, right? We are seeing Meta trying to sell some of the excess compute. In my CoreWeave video, I did explain that with CoreWeave's recent release of the Vera Rubin testing, what we actually noticed is that the Vera Rubin is actually 10 times more efficient than the previous edition of the Blackwell chips. And because the contract that Meta signs with CoreWeave is a binding agreement that they are not able to resell the capacity that they get from CoreWeave, it makes sense that Meta is moving their compute over to the facility that they already have with CoreWeave. And then because of that, they may have excess Blackwell chips that they are no longer using. And those are the chips that they are renting out. This is just my 2 cents. Could that be the case? Likely. We have to wait and see. Does that mean that capital expend? Does that mean that the build-out is over? I think we are yet to see that next step function change in terms of the abilities of AI. We had that at the start of the year with Anthropic introducing Cowork, and Claude Code. And then we saw that step function change in terms of AI's ability. And then all the different models started to play catch up, right? OpenAI was trying to run Codex and things like that. So I think we are really waiting for that next step function change in terms of the front model capabilities before we can see really an expansion of the build-out. But what I do believe is like what Jensen has been saying, NVIDIA CEO has been saying for a while now, as if the companies become more efficient, like token efficiency, people really go all into token maxing, that might actually be a good thing because it gives more capacity for the broader economy to actually integrate AI into their businesses. We are seeing companies like McDonald's do it. We are seeing non-tech companies start to adopt AI, and we can see that actually broaden up. If the cost for adoption comes down, it becomes less risky for the companies to adopt AI. They adopt AI, they become more efficient, and then of course you get long-tail growth for the US economy. That is the broader thesis if you believe in it. So I don't think this news by itself, Meta and Microsoft, by itself, I don't think it's too worrying. Adding in everything else that we're seeing, I think there is an argument to be made about the capital expenditure spend reaching some sort of a limit. It's either that or we are seeing this turn into a two-horse race where Microsoft is happy with what they have gotten in terms of their market share, and they're leaving the door open for GCP to catch up, and with AWS to be the real competitors over here. So again, we will have to listen to Amazon tomorrow to get a better idea. But I just want to jump in very quickly to Robinhood. I haven't completely filled in every single portion over here, but I'm going to take you through what I already have. So the interesting thing is the number of funded accounts. I was expecting around 27.8 million funded accounts. I said due to the World Cup, due to prediction markets being very popular during the World Cup, I expected a lot of new funded accounts. I expected 27.8 million. So the actual number, 28.4 million Hood accounts, actually is very encouraging. So the question is how much of this growth will stay and translate on into Q3. Now, you have to remember the early part of Q3, you do have prediction markets still running pretty hot because that is the final couple of weeks of the World Cup. So I think let's see how many of this actually yes, Amazon is not competing on frontier model. Sorry, what I was talking about is because they are expanding their infrastructure. I would saying that the capex plan is to expand their capacity for people to use Azure, and in Google's case to use GCP. So I'm not sure whether or not Microsoft is just willing to maintain what they have with Azure right now, because Azure is growing at 48%, 43%. Yes, in terms of frontier model, Anthropic, OpenAI, GCP, and right now I am hearing more and more from engineers that Kimi is really yeah, Kimi is really making a little bit of a splash in some arenas. Yes, of course. I think that there is an argument to be made, especially for Meta, that they are already so far behind in this frontier model chase. Like Muse Spark is nowhere near the levels of Anthropic, of OpenAI, even Gemini. Like I feel like 1 and 2, OpenAI and Claude, they are quite close. Then you have a little bit of a fall off in third place, which is Gemini. And that fall off is already noticeable. And then after Gemini, you have the rest. Is SoFi overvalued? Actually, no. SoFi is nowhere close to overvalued. If you compare with the rest of the sector, I think SoFi is being priced in a very weird range. We are in between a bank valuation, like JP Morgan, they are being valued at around 20 times, and then companies like Robinhood, they are valued at 60, 70 times PE. SoFi is like in 38 times PE. I think after today falling perhaps even 33, 32 times PE. So we are nowhere near overvalued. Valuation is not the reason why SoFi is down. The reason why SoFi is down is the expectation of rate hikes. So if you ask me, I think it is both. Right now, they have chosen to really ramp up the lending sector, which is the bank side of the business. And the reason why they have done that is because the lending segment actually gives them visibility into future revenues. It is a consistent cash flow, and they need this consistent cash flow because during this period of time, since they cannot get that favor, since the rate environment is still uncertain, they have chosen to use this period of time to really go and reinvest into other parts of the business. SoFi USD, big business banking, and building out all these other businesses do require them to have a consistent and a visible, predictable cash flow, and that is what lending gives to them. Now, this switch of their revenue mix back to focus on lending, it's kind of like taking 2 steps forward, 1 step back. Markets are a little bit more fussy because of that. And based on companies' guidance, we could see a further acceleration in Q3. Okay, back to Kunal's question. Yes, those open rates are stealing from Anthropic, and so I mean, I was listening to the All In podcast debate, and I think that I don't know. I understand why the trading why it makes everything cheaper, and so token costs should come down over time. But if token usage goes up, is there a place where we find some sort of a balance? But I think it is absolutely fascinating what is developing in the AI space right now. You have fantastic open source models that are competing, and open weighted models, sorry, that are competing with OpenAI, that are competing with Anthropic. I really don't like what Anthropic is doing, lobbying the government, trying to put up regulatory hurdles. I think that is very self-centered, self-serving. It is trying to build up their own company and then hindering the developments of AI in the US, which is not something I am for, because I thought you were talking about stealing market share. Okay, so this is the thing, right? Anthropic themselves are embroiled in this lawsuit where they did not buy a single book. Okay, so Anthropic I'm not sure if you followed, but Anthropic paid around 1.8 billion dollars in a settlement in recently, and this 1.8 billion dollars went out to all of the authors. I think they pirated over, I can't remember how much, 300,000 authors, something like that. It's quite an absurd amount, but they pirated all of these books and they trained their models on books of authors that, number one, did not give consent, number two, they did not even pay. So they actually got sued for piracy. Okay, and they actually settled by paying off 1.5 billion. This money actually got distributed to the authors. And I agree with the All In podcast that it's quite ridiculous that Anthropic thinks that they are able to train off data, train off outputs produced by different authors, train off outputs produced by different companies. And yet, when someone pays for their model, pays for their artificial intelligence, trains off their own output, they suddenly scream, piracy. They are basically doing the same thing. So if you ask me, I think that recently, if you saw the document that was being signed by a lot of the different CEOs, I think that shows you where everybody's head is at. Other than Anthropic, everybody else thinks that the open weight model is doing the right thing. Because at this point in time, where we are in 2026, there is no data out there that is fully yours and fully, like, everybody's product, everybody's service is derived from something else. So to make that argument that, you know what, people cannot use my outputs, because you see, what these open weighted models are doing, they are not stealing like the back-end code of Anthropic. That's not what they're doing. They're buying subscription accounts to Anthropic, they're running Anthropic's models, and basically from the output that Anthropic gives to them, they are reverse engineering the back end. So technically, they are not doing anything illegal. What the All In podcast did suggest is that what Anthropic could have done, and it would have been much more classy, would be to go after these Kimi, K3, and all that for breaking terms of service, right? Because if they open a lot of bot accounts to run multiple outputs, then you can say that, that is malpractice, that is against terms of service. But to sue them for what, IP theft, I think that is a little bit of a stretch, because that is exactly what they're doing. They are training, they have been training their model, and they are still training their model on outputs of other authors, of other products and other services that did not give their consent to them, and they did not, and like we have seen, they did not pay for some of these things, some of the data that they are using to train their model on. So if they can do it, and they have reached a point where they actually have seen real adoption from their business, there is no reason why they should be trying to block other people. But the fact is that they are more concerned with themselves, their growth, their IPO, rather than the development of the AI community as a whole. And that is why people are a little bit pissed at them. I did see a couple of engineers recently, at least two today on X, saying that they stopped their Anthropic subscription because of what Anthropic is doing. All right, so with Robinhood, monthly active users, I didn't see this exact number, so I've still highlighted this in yellow over here. So I will update this when I actually see the numbers. I was just doing a very quick glance through. Gold subscribers, for Robinhood's case, 4.8 million, 37% year-over-year growth, 17% penetration. So again, like I said, if you are expecting these kind of levels of penetration for SoFi, perhaps within 2 to 3 years, you can see similar levels of penetration. So this has been around since for the longest time. But if you're talking about from the gold card, that is in Q1 of 2024. Q1 of 2024, that's 1.6 million. They basically 3x'd in the period of 3 years. So I expect SoFi to be able to grow a bit faster because SoFi is starting off from a smaller base. So let's see how SoFi Plus goes. Asset under custody, $370 million. Again, this is not really an accurate gauge because this fluctuates with market conditions. But what is important is net deposits, 21.7 million. A lot of this likely driven by prediction markets. On an annualized basis, this is still growing at 27%. On a year-over-year basis, this is growing at 57%. Assets under custody, nearly $13,000 per account. Net deposit per account, 764. Revenue per funded account, I think they count it per active members. I'm counting it per funded account, still the same, is around $43. So in terms of segment revenue, we have gotten transaction revenue, 44% year-over-year growth. We are seeing a re-acceleration again, fantastic. Net interest revenue, 389 million. Other revenue over here, you can see a huge spike. This is likely to do with the prediction markets. So very strong growth, $1.3 billion in terms of revenue. So on a revenue basis, like I said, SoFi just did 1.2, Robinhood did 1.3, only $100 million difference. And yet in terms of the market cap, one is at $80 billion, the other is at $20 billion. The only difference is that SoFi, technically, they hold a bank charter, they can do lending. The lending segment is what is freaking people out. But the lending segment also allows them to do things that other people cannot do. But I think when I say that, it's not very consumer facing. It's a lot of B2B stuff. So for example, when we're talking about SoFi crypto, a lot of the companies that want SoFi wants to use SoFi's tech platform needs them to be a nationally chartered bank so that they can put their deposits with SoFi and use SoFi USDC as well. And what SoFi can do is to take that deposit and to go and put it in their Fed master account rather than go and buy the treasuries. So they really have that liquidity. They really have that edge over some of the other companies out there. But again, because this is a B2B product, I don't think it is as priced in compared to Robinhood. I think B2C stuff sometimes in the short term can be priced in quicker at a faster pace than B2B. At least that's what I've been realizing over time. All right. Let's see, quarterly data. How much have I can't remember what they're feeling. Okay. So quarterly data, 1.3 billion adjusted EBITDA. Sorry, let me zoom this in. Hopefully you guys can see. Quarterly data, we got 1.3 billion. Adjusted EBITDA, 741 million. This is a huge increase from $434 million just a couple of months ago. Then you have net income coming in at $573 million. So net income, once again, back to the $40 range. Number of shares outstanding around 912 million, and that is a dilution of 0.3%. Is it 0.3? Yes, 0.3, because I'm counting this on a year-over-year basis, right? But quarter over quarter, we have seen them buy back shares, and that is why I think they announced 4 million shares being bought back in this past quarter, and then you plus the stock-based compensation gets you to around 912 million shares. EPS, the reported number is 62 cents, but because I'm not using the actual figures, I'm using the rounded figures. That is why the EPS is slightly different over here. But no big deal. In terms of marketing spend, they spent more or less in line with what they did last quarter, but they have a lot of net new members, and so because of that, the customer acquisition cost has come down drastically. So at least for this quarter, payback period seems very healthy. But generally, the payback period, you can see, comes in around 1.5 years. Okay, so with that, let me just fill this in. We have all this total revenue. Oh, wait, my total revenue is inaccurate because I need to drag this across. Total revenue is $46.80. when I count the actual revenue. Okay, let's go to the valuation. $46.06, $1.3 billion. So earlier on, someone was asking about okay, give me a minute. Where is all my comms? Here, right? Okay, and where is, what's wrong with my data? Okay. So this is the comms. Robinhood has fallen. They were trading at a 60 times PE. Right now, SoFi is trading at around a 34 times PE. So for someone who was asking just now, is SoFi overvalued? Definitely not. You can see Upstart is still at around 60 times. Affirm 67 times. We are going to wait for them to report as well. Block 64 times. Robinhood has come down to 50 times. So on that basis, I don't think that SoFi is overvalued. You can see they are trading at a higher multiple than American Express, AXP. Of course, very different business, but that's a business that Anthony Noto likes to compare SoFi with. So if you compare SoFi to the legacy financial institutions, they are trading at a higher multiple. Compare them to the fintech, they're trading at a lower multiple. And I think they are basically right in that ballpark, right in between the legacy and the big fintech. So I would say that perhaps a 40 to 50 times multiple is fair for SoFi. Hood should be easily back in the 60s. Okay, so this multiple compression that we're seeing over here, let's see how this actually plays out. EBITDA. Okay, I got no, I'm not putting in the free cash flow numbers over here. That's fine. EPS 63 cents. So on a trailing 12 months basis, we have gotten, okay, so this is the problem, right? On a trailing 12 months basis, we are seeing EPS of $2.28 based on this 63 cents EPS. So it really depends. So PE ratio. Okay, let me do it. PE ratio will be here. If we are assuming what let's say this recovers back to a 60 times PE. Yeah, the price target would be closer to $137. Okay, now the problem is right now in the after hours, oh, things are going up. Did Trump say something? Anyway, we'll take a look. In the after hours now, Robinhood is basically flat. We are at $90. $90 means we are taking this all the way down to what? 40 times PE? Around 40 times PE. So Robinhood and SoFi is trading probably just as cheap as each other right now on a PE basis. And I think it just shows you that really the difference between the two companies is just their level of profitability. Robinhood is a little bit ahead of SoFi because they are technically a more older company than SoFi. Granted, they came out around the same time, IPO around the same time, but Robinhood has had a longer track record. Anthony Noto really just started building from scratch in 2018 when he came on board. So right now, the market is basically pricing Robinhood at a 40 times PE. I think that is ridiculous. If they go back to the pre-earnings multiple of 60 times PE, we should be seeing Robinhood at $136. Even a 50 times PE would see us closer to $113. I think that is definitely very possible. There is nothing that Robinhood announced in this quarter that is, I would say, bad. So, yeah, I'm actually quite bullish on the company. If it drops into the 70s, I don't know what I'll do. Right now, in this account, I'm kind of out of cash, so I'm managing the position a little bit more tightly. But with that being said, thank you for being here, ladies and gentlemen. We are happy with what we are seeing. We'll be on tomorrow around the same time. There will be no market open stream, but I will be on around 4 a.m. again for Amazon and for Apple. But thank you for being here, and I will see you tomorrow.